Hello, my Teaserking family. I gotta fix my hair. Okie dokie. Now I'm better. How is everybody today, my Teaserking family? I am fine. Let me take my picture. All right, so let's start with our gold, which I just had. Gold is back to 23.90. It got to 24.05. It's hanging between 24 and 23.85, 23.90. And if you notice, the derivative drops aren't nearly as severe. Like you're not getting the $60, $70 drop like we got the other day. We went up from 23.88 to 24.05, and then there's a 23.98 down to 23.85. So it only goes down $7 or $13. And that's the difference. So you don't always get the $50, $60 drops. Silver, 26.79. We know it's bullshit. So we go buy. If you didn't know better, you'd get panicked and sell and everything else, which is as we're nearing the end of the economy, they don't want you in silver and gold. So they're trying to keep the silver price down. Although one has nothing to do with gold. And neither has anything to do with the money. The dollar's independent. You're in the dollar, you're in the dollar. Gold's an asset. So 23.90. It's being stubborn, but I think this is like their last stand, and then it shoots to 2,500. We'll get there soon enough. All right, so that's what we got for that. Let's get to baseball. How did we do yesterday? We did terrible yesterday, too. We had San Diego, which did win 6-0. Cincinnati under 8. They play a 10-run game. Okay. 49ers, they lose 11-5 to Washington. Okay. Baltimore over 9. It's like every over game went under and every under game went over. Baltimore 5-2 Toronto. Baltimore didn't hit. Milwaukee under 9. They win 10-0 over Atlanta. I had the game pegged, but Milwaukee scored 10. Minnesota over 6. That wins. The Cubs 7-3. We have Kansas City, which loses 6-5 to Boston. Seth Lugo, what are you going to do? 2.72 ERA. Oakland, they lose to the White Sox. That's over. Seattle over 7. Plays a 6-run game, and the Dodgers over 8, and it's a push. What a terrible day. 2 winners and a handful of losers. So the last 2 days have been bad, but that happens. All right, let's look at today. Now, I know today we already have games going. Arizona 7, Cleveland 3 in the 9th. Chicago Cubs 4, Mini 2 in the 4th. Houston 2, Texas nothing. The White Sox and Oakland 0-0 in the 1st. And then in about 20 minutes, we got the Angels and the Yankees. Daniel 1-2 with the 4.91 against Luis Gil, 11-5 with the 3-2. So we're going over with the Yankees because they're hitting the ball well. We'll go 3 units. I played 2 5-units yesterday. I won with Minnesota over 6. They played like a 9-run game. And Oakland, the White Sox finally won, so we're off of that. Arizona and Cleveland is a doubleheader. First game, Arizona's up 7-3 over Cleveland. Arizona's playing good ball now. Eduardo Rodriguez making his first start of the year. Never heard of him. Carlos Carrasco, 3-9 with a 5.53. So I'm going to go with Arizona again. 2 units. San Diego and Pittsburgh. So Pitt lost with Scanes. Then the San Diego beat them yesterday. And Michael King, 9-6 with the 3.26 for San Diego. Marco Gonzalez, 1-1 with the 3.72 for Pitt. I'm going San Diego again. 2 units. Cincinnati, Miami. Cincinnati minus 135, 8.5. Andrew Abbott, 9-8 with the 3.41. Never heard of, against Valenti Bozo, 0-1 with the 4.20. I have no idea what to do with these teams. 49ers, Redskins. Redskins killed them yesterday. Blake Snell, 1-3 with the 4.29. Pitched a no-hitter last time out. And Jake Irvin, 8-9 with the 3.56. So the guy pitches a no-hitter, and his ERA is 4.29. So what do we do? See, Blake Snell pitched good against Team A. Now he plays Team B. It's a whole different matchup. I don't know. I'm going to go over. Let's go wash over. 7.5. 2 units. Baltimore, Toronto. Baltimore 145, 9.5. Trevor Rogers 2-10 with the 4.76. Bowden Francis 4-3. Okay, so this is a good over. Let's go Toronto over 9.5, and that's 3 units. Milwaukee, Atlanta. Milwaukee won 10-0. Freddie Peralta for Milwaukee, 6-6 at the 3.89. Chris Sale 13-3 with the 2.71. Let's go Atlanta, 5 units. Chris Sale. Boom, boom. May they all be that easy. California and the Yankees. We already got the Yankees. This is game 2. Carson Fulmer, 0-2 with the 3.69. Will Warren, 0-0 with the 6.75. We're going over in the game 2. And the method is, if it's a close game in game 1, the bullpen will they'll use the better bullpen guys, leaving the worst bullpen guys. Tampa Bay, St. Louis. St. Louis 127.5. Ty Bradley 6-5 with the 2.71. Eric Fetty 7-5. So we're going to go under here. T-Bay under 7.5. We'll go 3 units. Boston, KC. Boston won yesterday, beating Seth Lego. I don't know. You beat my 2.5 ERA pitcher. You beat him. Cutter Crawford 7-8 with the 3.81. Cole Reagans 8-7 with the 3.36. So I'm going to go under here. Boston under 8.5 and hold my breath. 2 units. Haven't found that one game. Chris Sale, I think's been hit. The Mets in Colorado. The Mets 165-11. Paul Blackburn 5-2 with the 4.11 against Ryan Feltner 1-10 with the 5. Okay, here we're going to go Colorado over 11. 2 units. See, I don't love these games, but they're okay. This one I like. Detroit, Seattle. Seattle minus 135-6. Tarek Skubal, 12-4 to 2.57. Last time you got killed. George Kirby, 8-7 with the 3.04. So, again, we got a fucking 6. Are you kidding me? How the hell we can't go under 6? That's ridiculous. Jesus. All right, we'll bet 1 unit. How the fuck can you make a 6? That's ridiculous. I like that game under. Seattle can't hit, and Skubal, he'll probably shut him out, but He's been pitching pretty bad lately. Philly and the Dodgers. The Dodgers 145.9. Tyler Phillips 3-1 with a 4.39. Gavin Stone 9-5, 3.63. So we're going over here. Philly over 9. 2 units. So let's go through it. Yanks over 8.5 in game 1, 3 units. Arizona 2 units. San Diego 2 units. Washington over 7.5, 2 units. Toronto over 9.5, 3 units. Atlanta, Chris Sale, 5 units. The Yankees over 9, 3 units. Tampa Bay under 7.5, 3 units. Boston under 8.5, 2 units. Colorado over 11, 2. Detroit under 6, 1 unit. And Philly over 9, 2 units. So you can see a whole lot of 2 units. A whole lot of 2 units. So if I was betting, I'd bet Atlanta and Chris Sale 5 units, and that'd probably be it. Maybe the Yankees over. Houston's not hitting. Washington and the Niners have been playing high-scoring games, so maybe that one. Tampa Bay, maybe. And Philadelphia, I don't know. They played okay. Arizona won game 1, 7-3 over Cleveland. Brandon Pfaadt, 6-6 at the 3.92, beats Ben Lively 10. I would have played it under, and it went to 10, so I would have lost. Nothing is as it appears. The Cubbies 6-2 over Minnesota. I'd have played that over because Minnesota hits. Houston 2, Texas nothing. The White Sox, they're starting to streak the other way now. But we're off of them. See, now once they win, you're done. Now you look for another streak. You don't mess around with them. So let's see if we go into standings. This one doesn't do it. Some of them show like who's when. Let's see if we go to who would do that. Let's try covers for standings. No, they don't show streaks. No, it doesn't show streaks here. Let's see. I doubt scores and odds would do it. Looks like a baseball, but Major League Baseball, they show it. Yeah, here we go. All right. So this is MajorLeagueBaseball.com. Okay. So if you go here, MajorLeagueBaseball.com, and you go on regular season, standard, and you can see there right here, streak, 1, 2 in a row, 1, 3 in a row. And of course, here's your team. So the Yankees, let's see if there's any streaks. We got Boston on a 3-game win streak. Everybody else, nothing. Cleveland lost 4 in a row. Everybody else, 1 in a row. We've got nothing, 1s and 2s. We've got Atlanta losing 3 in a row. We got nothing. We got Arizona and San Diego have won 3 in a row. And that's it. So we really don't have anything. They show runs scored, runs against, who cares? So the Dodgers have a 1-game lead over Arizona and San Diego. The 49ers are 4.5 back. We got Milwaukee. We got St. Louis 3 games back. Pirates 4 games back. Cincinnati 5.5 and the Cubbies 6. Pretty good good race there. We've got the Phillies and the Atlanta tied. And oh no, we got Phillies up. The Braves 6.5 back. The Mets. I wonder if I read that right. No, I didn't. Milwaukee's in first. St. Louis 6 back. This is W's wild card games, but who gives a shit? Milwaukee 6 games up on the Cardinals, 7 on the Pirates, 8.5 on Cincinnati, 9 on the Dodgers. Okay, LA's 4 up on Arizona, San Diego. The 49ers are 9.5 back, and Colorado 24 back. And then the Phillies 6.5 on Atlanta, 8 on the Mets, 15.5 on Washington, and 25.5 on Miami. AFC West, we got Seattle, half a game ahead of Houston, 5 up on Texas, California 9, and Oakland 12.5. That Billy ball really works, that money ball. Oakland's guaranteed last place almost every year. All right, we got Cleveland, we got Minnesota 3.5 back, KC 5, the Tigers 13.5, and the White Sox 40.5. White Sox have won 28 games. What is that? Jesus. The Yankees half game up on Baltimore, 5.5 on Boston, 9.5 on Tampa, 15 on Toronto. That is wild. That is regular. That's your standings. So no big streaks going on now. So I don't know if I screwed up my interview or not yesterday. I'm waiting to hear. I thought we'd hear by now. We haven't, or I don't know. The recruiter hasn't called or emailed, so maybe they haven't made up the decision. I talked to a couple of recruiters. It shouldn't be a big deal that you were excited and you thought she had hired you, or contract, and then it's ultimately up to her. She liked me. We'll see. Don't know what they're waiting for. I mean, it's just a contract job. And then it's supposedly 6 months to hire. So if it doesn't work out, you let me go, and if you like me, you keep me. So I don't know. Hopefully I'll hear what's today, Wednesday, by tomorrow. I don't like this. My recruiter's on vacation, so this guy's coming in. I don't like him at all. He's really a strange guy. So don't know. I left a message. Well, do we hear anything? And I assume, I hope he's not one of these. If it's a yes, he'll call me, and if it's a no, they don't talk to you like that other job with the 4 interviews. They just let you. They don't respond. If they need you, they'll call you. Otherwise, we won't. Don't call us. We'll call you, which is fine. Anyway, so that's what's going on. So that's baseball, football. What should we do? Let's do college today. Let's look at any new adjustments in our college football. August 24th. It's August 7th, 14th, 21st, 2.5 weeks. We're getting there. We're getting very close. So let's change to college. All right, let's see if there's anything worthwhile. Florida State 13, 56.5. That actually was 55.5. So that's good. SMU 25-57. That was 24.5, 25. I'm not going to change it. Florida State with the 16 defense, Georgia Tech with the 30 defense. Florida State got the new quarterback in Uglia Buglia, who's terrible. Georgia Tech, a returning guy, King. So Georgia Tech with the edge there. SMU 25-57. SMU with the 17 defense, Nevada with the 33, and both their quarterbacks are returning. So why did I put that? Well, SMU is a 17. So I'm thinking, okay, SMU's a 17. That's probably not bad. They should be a 17. See, if you got a good coach and you got the coach back, he's probably gonna, they usually have too deep on the defense. So it's, like, see, you got 7, 8 defensive linemen. Not all of them graduate. And then you have 5 or 6 linebackers and then 6 or 7 guys in the secondary. So you lose some of them, but you don't lose them all. So you have something, and then you bring in the new guys in the rotation. So I think they're okay there. So that's why when I see SMU with the 17 or Florida State with the 16, you expect them to be close to that again. Nevada at 33, you expect them to be close to that again too. So you're going to make some assumptions week 1 and 2 on last year's data, and then you got this year's data, and then you're going to look at it. Because if SMU beats them 56-0, now Nevada's a 56 defense. Well, obviously it isn't, but in the one game it is. So we expect them to be weak. Just not sure how weak. So anyway, that is where we are at. Next game is now we go to the 29th, which is Friday night. Well, it's Thursday night. Yeah, Thursday night. We got Minnesota 2 and 50.5. Both teams with the 27 defense, and both teams have new quarterbacks. So we'll see what that's all about. Mac Brown, he's so overrated. He got lucky. He won with Vince Young or Steve Young. So he got lucky there, and then that's all he's ever done. It was a fluke because the guy was 6'5" and really a running back, a big running back, couldn't throw. And so he got lucky and won there. But otherwise, it's a dud shit. All right. Jacksonville State 357. Coastal Carolina's got a returning quarterback. Jacksonville State, a new one. Rick Rodriguez is the coach. Coastal Carolina had a 25 defense. Jacksonville State a 20. Here's the game. It's probably a good one. Utah against Southern Utah. And they're laying 37.5. And I'm like, with Cam Rising playing, I think they'll cover that easy. Michigan State 11.5, 46.5. Problem is finding a place you can bet it. These are the Friday night games now on the 30th. Michigan State 11.5, 46.5. New transfer quarterbacks for both. Michigan State's got the Oregon State coach and quarterback. But interesting, the runner didn't come with. Florida Atlantic with the 25 defense, and Michigan State with the 22. Which we expect to get much better because they didn't even have a coach. Oregon State's really good. All right, Oklahoma 42.5, 59.5 to Temple. Temple, new quarterback who's weak. Oklahoma, new quarterback who's also weak. A 22 defense from Oklahoma, surprising how bad that is. And Temple with the 36. We'll see. I mean, Oklahoma's a brand new, I think he's a freshman quarterback, one of these running dual types that can't throw. Wisconsin, 24, 56.5 against Western. New transfer quarterbacks, but Tyler Van Dyke is Wisconsin's. He's a superstar. 19 defense, Wisconsin. That's a little high. They'll probably be a little better this year. And Western with the 32. So we'll see. With Van Dyke, I think Wisconsin lights him up. TCU, 8.5, 61.5. TCU's got their quarterback back. Stanford's got theirs, but he sucks. 37 defense for Stanford, 27 for TCU. I expect TCU to be much better this year. And Stanford, they're already a Z team. Game of the day, Saturday, August 31st, Georgia Clemson. Georgia minus 14 and 48. Both teams have their quarterbacks back. The game's in Atlanta. Georgia with a 16 defense, Clemson with a 20. I look for Georgia's defense to dominate this game. But Beck's pretty good, but they lost Brock Bowers, so we'll see. He missed a few games last year, so the backup tight end had some experience or whatever they're going to use. Virginia Tech, 13 and 54 to Vanderbilt. Virginia Tech with the 24 defense, Vandy at 36. Virginia Tech's got their returning quarterback, and Vandy's got a new transfer quarterback. I love it. It's the transfer. So you were third string on this team, and now you're going to be starting for my team. What's wrong with that pitcher? Here's one. Iowa's playing Illinois State, which is a high school team. Iowa's laying 24.5. The over-under is 42.5, and you're tempted to play the game under because you'll probably never see a 42 over-under on Iowa the rest of the season. It's hysterical. Maryland, 21-48 against UConn. New quarterbacks for both teams. Maryland with the 23 defense, UConn with the 30. Pitt and Clark Kent. Pitt 23.5, 53.5. Both teams with new quarterbacks. Kent was a 35 defense in the MAC with no offenses, and Pitt was a 27. I don't know. Pitt had a bad year. Narduzzi's not a really good coach. He's a good defensive coordinator, shouldn't be coaching, so this will be interesting. Penn State, good game, 10.5, 51.5 to West Virginia. Penn State had an 11 defense. West Virginia, 28. Both teams have the quarterbacks coming back. And what I learned is Drew Aller, Penn State's quarterback, was Mr. Ohio. And he doesn't go to Ohio State because they don't like drop-back passers. It's crazy. Ohio State's got to change. Their quarterbacks are never good coming out of college. So this should be an interesting game. Look for a revenge game here. Miami, 2.5, 54 to Florida. Miami gets Cam Ward from Washington State. Florida's got their guy back who came from Wisconsin, but he was pretty good last year. Stats-wise, 27 touchdowns, like 3 interceptions. But did they score? Miami with the 22 defense, Florida with the 27. As we know, Miami with the worst coach in the Division I. UTSA 24, 49.5 to Kennesaw State, who's Division II. are now playing Division I, so you have no stats on them because they just played Division II. Both quarterbacks are new, and UTSA gave up 24. They had Frank Harris on the 10-year plan, and he's gone now. Well, what got screwed up was COVID. So they let everybody repeat a year because of COVID. So they played COVID, then it didn't count, so they got to play another game. If they transferred or got injured, so like Cam Rising, so he plays, then he gets hurt, so he redshirts. So now he's playing his 7th year, but it's really his 6th year. I love how I read that the problem with Hartman is he was older. He was like 24, 25. So he was too old. Yeah. Really? Okay. Yeah. How many 18-year-olds are in the pros? None. They started at 22, 23. He's 25. Really? He's too old. Brady wants to come back at 47. So I don't know what you're talking about. Nebraska, 27.5, 48.5 to UTEP. Nebraska with an 18 defense, UTEP a 28. UTEP, the returning quarterback. Nebraska with the new quarterback who's a freshman. To me, they're an under team. Matt Rule doesn't know how to coach. It's a good defensive coordinator. Eastern Michigan won, 49.5 to UMass. Eastern was a pretty good team, 24 defense. UMass with the 38 defense. Returning quarterback and a new transfer for Eastern. That's really what separates the teams is when you got that 38, 39 defense. That's what you're looking for. So when you see that, I'm going to bet against that. I wouldn't think UMass got any better defensively. Ohio State, 50, 58.5 to Akron. Ohio State with 11 defense, Akron with the 28. New transfer quarterbacks for both teams, but Will Howard we love from Kansas State. Akron, I don't know who would go to Akron who's any good. So I think this is a big, easy one for Ohio State. Northwestern, 443 to Miami of Ohio. Miami of Ohio with a 16 defense, Northwestern with a 24. Returning starter for Miami, a new quarterback for Northwestern. Here's where you see the upset. You go, wait a minute. I got the quarterback back. I got a 16 defense. Why is Northwestern laying 4.5? They have a 24 defense and a new quarterback. And that's what you look at. That's why you look at the defense. Here's a perfect example of Northwestern's going to have a hard time. Miami has a 16 defense. Now, how many players they lost or whatever, but the coach is there, the quarterback's there. They should still have their system there. Syracuse, 17, 47.5 to Ohio. Like Scotty's from Ohio. Syracuse is the 24 defense. Ohio at the 15. The Ohio State quarterback, McCord, who sucked, is the Syracuse quarterback. Ohio's got a new one. Syracuse is the new coach. We'll see how that goes. I'm not sold on Syracuse with that quarterback. Indiana, 20.5, 50.5 to Florida International. Florida International's got a 32 defense. Indiana's got a 30. Returning quarterback, Florida International. Indiana's got the new transfer quarterback from James Madison. Also the coach from James Madison. James Madison was a very good team last year. I look for Indiana to be much improved this year. I doubt there'll be a 30 defense like they were last year. James Madison was an 18 last year, so look for it to come down to that level. But we'll see. Now, again, in the Big Ten, now you've added Washington and Oregon and USC and UCLA. They're not explosive yet. And then you've got Ohio State, Penn State, Michigan State should be much better. Michigan will be much worse. So you should start scheme or last year there was nobody in it. Nobody could score points, right? And so this year now you've got 4 or 5 teams that can. Texas, Colorado State. Texas 35-59. Texas had a 17 defense. Colorado State a 30, and both teams returned the quarterback. And I love Arch Manning's on the bench again. Yours will be the man. So Arch is wasting 2 years. I don't know what's so special about Texas. Georgia Southern, Boston, Boise. Boise, 11.5, 57.5. Boise, a 25 defense. Georgia Southern, a 30. Boise with the new quarterback, a transfer from USC, is a freshman. And Georgia Southern, also a freshman quarterback. So we'll see how the quarterbacks are. Boise's going to be a much stronger running team this year. Who knows? South Carolina, 20-56 to Old Dominion. Both teams with the 26 defense. Old D returns their quarterback. South Carolina had Rattler, who just sucked. There was a thing on Rattler, how he was going to be the next Drew Brees, and you're like, yeah, bullshit. He was not Drew Brees at South Carolina. So here's where you get guys trying to get clicks and likes. So he says this to get people to watch his video and to like him, but it's all bullshit. There's no way he's any good at all. I can't believe he got drafted ahead of Hartman. South Alabama, 7-64.5 to North Texas. North Texas with a strong offense and a 37 defense. South Alabama, 22 defense. Returning freshman quarterback for South Alabama. And North Texas has a new transfer. North Texas is one of these explosive teams, so good over bet. Houston, 2.5, 56.5 over Vegas. Houston with the 31 defense, Vegas with the 27. A new quarterback for Vegas. The starter went to be, hopefully, the starter at USC. Houston has their quarterback who sucks, but they got a new coach, Willie Fritz. I guarantee you the defense goes from 31 to 21, and they should be much more efficient offensively. They'll have a much better team. Vegas should be good. Vegas has been playing well. Troy, take your pick, 14.5, 15, 15.5, or 16. We'll go 16 because we don't want them. Nevada with the 47. Nevada with the 33 defense, as we mentioned. We'll see what it is after SMU gets a piece of them. And Troy with the 17, but the coach is gone. The weak offensive coach from Notre Dame he was actually the defensive coach there. No, he was the offensive coach. Very weak, didn't know how to use Hartman. Terrible coach, new quarterback. We'll see what Nevada looks like against SMU, but I wouldn't take Troy and lay 3 points in any game. See, the coach changes, and that's the whole key, right? Just like Michigan, the coach changed. Alabama, the coach changed. Alabama minus 31, 59.5 to Western Kentucky. Western Kentucky was a 28 defense, not bad. Alabama 18 with Saban. He's not here. DeBoer had a 23 at Washington. Returning quarterback for Alabama, Milrose, and a new transfer for Western Kentucky, who's pretty good. So here's the difference. Michigan loses Harbaugh, and they get Joe Blow. Alabama loses Nick Saban, they get DeBoer. Well, who do you think got the better end there? Obviously, Alabama by a mile got a great coach. Michigan got a guy who cried when they beat Penn State. So I don't know. Hard to really figure. All right. So we'll see. Alabama should be very explosive this year because DeBoer Now he had Penix, but he made Penix into a great quarterback. He's got Milrose, who's average, but the plays will be good. Alabama usually has decent wide receivers, nothing great, but none of them have done anything in the pros. Devontae Smith and Waddle, they're just average. Look at Puka. Look how much better Puka and what's his name on the Rams, Cooper Kupp. Look how much better they are than Waddle and Devontae Smith and all these guys. It's not even close. Puka 10 times better than Devontae Smith. But because Devontae Smith in college looked good because they ran this system where the receivers get open, then he looks great. But Puka, I think he played at UCLA, is phenomenal in the pros. Anyway, so that's the difference. Alabama gets a good coach, so look for them. That Georgia game, I think week 4, look for Georgia to run the ball down their throat, keep their offense off the field, and blitz like hell on them. Rice 11-49 to Sam Houston. Sam Houston was terrible offensively last year. Both have 26 defenses. Sam Houston with the new quarterback. Rice gets a new transfer. Again, both defenses are 26. There we go. Fresno State, Michigan. Michigan 21.5, 48.5. Michigan had a 10 defense, but they get a new coordinator and a new defense, a new offense and a new quarterback and a new running back and a new all-line. So basically the whole team's new. New quarterback, Orgy. Fresno State gets Mikey Keene back, who's outstanding. He was originally from UCF. Fresno State had a 25 defense. So this is finally we're going to see Michigan play a good team, and they're going to give them all they want, I believe. I don't, if we look at the defense, Michigan's 10, that's bullshit. That's the 6-man line blitzing every play. It's just a gimmick. Fresno State with the 25 in the Mountain West. We'll see. The newest coach is San Diego State, got an offensive guy. They used to just be Brady Hoke would be run for 2 yards of play. So look for San Diego State to not be the normal under that what they normally are. Anyway, I see Fresno State probably with a good chance to win this game. All right. Keep an eye on Texas Tech. They should have a pretty good team. Oregon 44 over Idaho. Probably covered that at halftime. Auburn. All right. A&M and Notre Dame. Now, A&M's -1 and 47. There is no more Notre Dame -1 and 47. Notre Dame with the 17 defense. A&M with the 21. A&M with a new coach who's a very good defensive coach. New transfer, Notre Dame, Riley Leonard, who was not really that good at Duke. I mean, it wasn't Hartman coming was a superstar. Riley Leonard, 3 touchdowns and 3 picks last year. I think he runs a little bit. What's Notre Dame doing? A&M gets the returning quarterback back, who was pretty good. So again, you're dealing with the 17 against the 21 defense. Quarterback's gone for Notre Dame. Running back's gone. He's on the Denver Broncos power back. So look for this game to be close and low scoring. Although I don't love Riley Leonard. I don't know. I think A&M might have him here. UCLA 13.5, 55.5 to Hawaii. UCLA had an 18 defense, and their defensive coordinator flew to USC, where he's their coordinator. Hawaii with the 32. Both quarterbacks are returning. UCLA, Deshaun Foster was the running backs coach, so he should know Chip Kelly's system. And the defensive line coach should know the defensive coordinator's system. So I don't think UCLA loses as much as I feared. Ethan Garber's the quarterback's back, although he's not that good. Hawaii's got that good offense, but no defense. They give up 32 a game. I don't know what they're going to be able to do against UCLA. They probably won't do much because UCLA will just blitz the hell out of them. We will see. Kentucky 26-50.5 to Southern Miss. Southern Miss is a Z team, a 36 defense. Frank Gore Jr. has graduated. New transfer quarterbacks in Southern Miss who sucks. Kentucky with the new quarterback. Kentucky with the 25 defense, which is kind of high. And Southern Miss with 36. Georgia Tech, Georgia Southern. Georgia Tech 20.5, 57.5. Both teams with the 30 defense. New transfer quarterback for Georgia State. He's not very good. And Kings is back for Georgia Tech, and we'll see him against Florida State in week 1. Yeah, I think Georgia Tech should be all over him here. I don't think their defense will be as bad as Georgia State's. I don't think will get much better. Charlotte and James Madison. James Madison 8-51.5. Keep in mind, though, the coach went to Indiana and the quarterback. So James Madison with an 18 defense, Charlotte with a 28. New quarterback for Charlotte. A new transfer for James Madison. He was the third stringer at Washington. So they make it sound, they get the Washington quarterback. No, Penix was the Washington quarterback. Arizona State 6.5, 46.5 to Wyoming. Both teams are kind of weird. Wyoming at 23, new quarterback. Arizona State had a 32 defense and a new transfer freshman quarterback. I don't know. Arizona State's not that good. Not like when Reggie Jackson was there, right? So we will see. We got to see what their defense looks like. I wouldn't touch this game. Arizona 30, 54.5. New Mexico with the 35 defense. Arizona with the 20. You got their quarterback back. Maeda is very good. Or no, Fafita is very good for Arizona. New Mexico gets a new quarterback. I think Arizona is going to murder them. USC, LSU, Bobby's game. DraftKings has USC by 6, and the other two have LSU by 6. And I would get on DraftKings, and I would take LSU plus 12, and I'd go on FanDuel and take USC plus 12.5. Over under 62.5. I think this game hits 100. LSU 28 defense, USC 35. I don't care if the UCLA coach is there or not. If you don't have talent, you can't just make them better defensively. Remember when Monty Kiffin went there from the Tampa Bay Buccaneers because Lane Kiffin was the coach. Monty's the defensive coordinator. He started giving up 60 points a game. It was terrible. He didn't have the right players for it. So even though he was a great defensive coordinator, not when he was at USC. Look for a lot of points there. And last but not least, Florida State minus 21.5, 51.5 to BC. BC with the 30 defense. Florida State with the 16 should be close. Uglia Buglia against a Castellanos for Boston College is pretty weak. So that is week 1A, 1B of college football. Still haven't made any picks yet. I'll post them soon. We got a couple weeks. So in class, we'll do a private class here. I'll go through and then I'll say, okay, here's what I'm taking. Here's our lock. Here's our 5-unit, 10-unit, whatever we're going to unit it. And we'll go down. I'll cover my picks first and then open it up to questions. So if you like Kentucky Southern Miss and I didn't talk about it or I didn't play them, then I'll give you my pick in the game if you're listening to other handicappers who aren't as good as the professor and you want to start betting games out of your ass because you have no idea. then that's what we'll do. And that's the idea of it. So some good games. We'll take a look at Michigan State, well, SMU, Florida State, Georgia Tech, Penn State, West Virginia is a good one. Ohio State's not a good game, but we'll watch Ohio State. Best game, Georgia Clemson, Miami, Florida, UNLV Houston we want to watch. Oh, Ella fucking Bama, UCLA, Hawaii, Fresno State, Michigan, Notre Dame A&M, and LSU USC. So those are the good games. And not my bets. Those are good games week one that we'll keep an eye on. We want to see how they play out. So that's college week one. Baseball again, the Yankees over 8.5, 3 units. Arizona, 2 units. San Diego, 2 units. Washington over 7.5, 2 units. Toronto over 9.5, 3 units. Atlanta, 5 units. Yankees over 9, 3 units. Tampa Bay under 7.5, 3 units. Boston under 8.5, 2 units. Colorado over 11, 2 units. Detroit under 6, 1 unit. And Philly over 9, 2 units. Detroit's not hitting again, and they got Scooble going, and Seattle doesn't hit. So we shall see. All right, a quick look at our gold before we get. And it's 23.83 down from 23.89. So again, they're doing their little derivatives. Funniest that silver 26.63 down 21. Yeah, it seems like a real price for silver. Okay. All right, there was a few YouTubes we want to share. Here's a good one. I haven't seen Thomas Sowell, which we like. Why evidence is poison to liberals. So in other words, liberals will talk, this X, Y, and Z, but it's not real. They just say it, but there's no evidence backing up their point. So when I tell you about gold, I'm saying, well, because they can't print it. And you go, yeah, okay, that makes sense. You backed up your point with inflation is printing the money, and gold can't go up because they can't print it. You can't inflate it. Oh, okay. So let's watch this one. Have some fun.
September is Hunger Action Month, but the Kroger Company's Zero Hunger, Zero Waste program works to end.
The left's vocabulary. A recent angry email from a reader said that certain issues should not be determined by the dictates of the market. With a mere turn of a phrase, he had turned reality upside down. Decisions by people free to make their mutual accommodations with other free people were called dictates, while having third parties tell all of them what they could and couldn't do was not. Verbal coups have long been a specialty of the left. Totalitarian countries on the left have called themselves people's democracies and used the egalitarian greeting comrade, even though some comrades have the arbitrary power of life and death over other comrades. In democratic countries, where public opinion matters, the left has used its verbal talents to change the whole meaning of words and to substitute new words so that issues would be debated in terms of their redefined vocabulary instead of the real substance of the issues. Words which have acquired connotations from the actual experiences of millions of human beings over generations or even centuries have been replaced by new words that wipe out those connotations and substitute more fashionable notions of the left. The word swamp, for example, has been all but erased from the language. Swamps were messy, sometimes smelly places where mosquitoes bred and sometimes snakes lurked. The left has replaced the word swamp with wetlands, a word spoken in pious tones, usually reserved for sacred things. The point of this verbal sleight of hand is to impose the left's notions of how other people can use their own land. Restrictive laws about wetlands have imposed huge costs on farmers and other owners of land that happen to have a certain amount of water on it. Another word that the left has virtually banished from the language is bum. Centuries of experience with idlers who refused to work and who hung around on the streets making a nuisance and sometimes a menace of themselves were erased from our memories as the left verbally transformed those same people into a sacred icon, the homeless. As with swamps, what was once messy and smelly was now turned into something we had a duty to protect. It was now our duty to support people who refused to support themselves. Crimes committed by bums are covered up by the media by verbally transforming the homeless into transients or drifters whenever they commit crimes.
All right, I thought we were gonna watch Thomas Sowell. So I hate when they do that. Thomas Sowell reacts. Let's see if there's any Thomas Sowell in this. Yeah, so this pisses me off. It's Thomas Sowell reacts and it's not in here. So this is really, really stupid. Sorry about that. Then I look at this, Martin Armstrong. Who the fuck is Martin Armstrong? So I'm not going to waste my time because I don't know what he says is good or not. Let's go to my liked. So here's one thing one reason why we don't need to see the video. Warren Buffett just sold $75 billion worth of stock. I think, let's see if it's stock. Yeah. $75 billion of stock. So this is why the stock market dropped. One idiot sells his stock. Now he figures it out. 3 years after we've been teaching it, he figures out the market's going to crash, so he sells, causing the market to crash because he sells. He probably sold of the $1,000 drop. He probably sold 800 of it here, and so we'll see what follows. Now I'm expecting more down and more down. We'll see what it's at today, but this is the problem. 10 foods. I was watching my doctor today. 10 foods that destroy your heart. Number one's Coke and Pepsi Pop. Number two is the energy drinks. Number three was margarine. Number four was wheat bread, white and wheat bread, alcohol, fried foods because it's in bad oil and it keeps getting reused. So I don't know that I hit them all, but most of them. Sugar, of course. Those are the 10 foods. So you don't have to worry about it. The CCP is panicking. Big changes in Venezuela. Now, here's a problem in Venezuela. They had an election, and the other guy won 6 million to 2 million or something votes, but the other guy won't leave, and he won't admit that he lost, but he runs the country and the military. So how's the other guy supposed to take over? So let's see this. China's panicking and big changes in
not be
Venezuela.
considered democratic.
This is now in Venezuela.
Recently, the Venezuelan election triggered a nationwide protest that has intensified. Even the local military and police have joined the demonstrations, and protesters have occupied the capital's airport. So far, 16 people have died, and 749 have been arrested. On August 1st, the U.S. issued an official statement recognizing opposition candidate Edmundo Gonzalez as the winner of the Venezuelan presidential election. On the other hand, Chinese President Xi Jinping called to congratulate Maduro on his re-election as Venezuelan president. This election has attracted worldwide attention and has particularly touched the nerves of the Chinese Communist Party, or CCP. If this country changes drastically, the CCP will not only lose one of its few friends, but it will also likely not be able to recover more than $100 billion in credit and investment. On the other hand, Venezuela's economy has regressed for 20 years just because of its closeness to the CCP. How did all this happen, and where will it go? In this episode, we will explore this issue. On July 28th, Venezuela held a presidential election. After the voting ended, the incumbent president, Maduro, declared himself the winner with 51% of the votes. The opposition candidate, Edmundo Gonzalez, received 44% of the votes. On July 29th, Venezuela's opposition coalition questioned Maduro's victory. They said more than 73% of the votes had been counted, showing Gonzalez had received more than 6 million votes, while Maduro had only received 2.7 million. On July 30th, the public protested in the streets after discovering election fraud. Opposition leader Maria Corina Machado announced Edmundo Gonzalez as the new president of Venezuela during a rally. Maduro's troops then began to suppress the crowd and fired tear gas to drive them away.
No, la bomba está aquí mismo.
On the same day, the incident led to the current president, Maduro, issuing an arrest warrant for opposition leader Machado and other related persons. Former Vice Prosecutor of the National Assembly of Venezuela, Freddy Superlano, was also kidnapped. At the same time, protests across the country intensified, with people toppling Maduro's portraits and burning his giant propaganda banners. They also splashed ink on the portraits of former President Chavez and toppled his statues. A 15-year-old boy was killed during the event. His little sister said the National Guard shot him at close range. He was later buried with a funeral procession carrying his coffin from his home while people held wreaths, flowers, and banners.
So the question is, how do you have a fair election when you're dealing with communism? Because the leader doesn't want to leave. He's got the military backing him. What are you going to do? Now, the question is how do these guys get to power? Are they elected and then they do become dictators like Hitler, Stalin, Mussolini? Cuba's guy, this guy, Venezuela, China, you think she's going to lose, Putin? So how do they get the power and what do you do with them? Because they won't leave. Even if you have an election, it's not fair. Does that sound like something that's happening here with Biden winning? And but he was 100 years old. So now what? They're going to make Kamala Harris the president because she'll get 5 votes, but they'll say, oh, no, look, she won. Yeah, oh, we got 1 billion votes that were just mailed in. And so she won. You know, look what happened. Trump won, but he couldn't. What could he do? And see here, it's laws, but the laws are bullshit because the people running the laws and the judges are all corrupt. This Anthony Blinken guy and Mayorkas and the FBI guy, they're all so corrupt. But that's what happens when you allow the lobbyists to pay everybody. So the banks really are running our country. So what happens in Venezuela? They're the guy's pocketing the gold. Russia is going to lose what, $100 billion or $100 trillion, $100 billion if the guy's out because the other guy won't give it to him or whatever. So Russia it's in their best interest to keep this guy in charge, who's obviously on the Russian payroll. They do communists. They don't do free markets. They do government markets, which we know how bad that is. It's a terrible place, Venezuela, just deeply communistic, just like China. It never works. So people that are, socialism, communism, fuck off. It doesn't work because you can't control the market with the government. You have to control it with the free market of the people. Free trade, solid money, free laws, limited government, and low taxes. And you don't get any of that in a communist. You don't get the free trade, and you certainly don't get the gold standard because the gold standard helps us, not the government, because they can't print. Government wants to print. They get off the gold standard and print, and then they all die because they're too stupid to understand. The more you print, then it's worthless. So they haven't understand that part yet. So that's Venezuela. I mean, I didn't go through the whole video, but basically, China's collapsing, as we know. I show you a lot of Chinese videos. This was something weird that happened, I believe, in the stock market. Let me play this one.
Here at North Oaks Dental, you can expect. Yesterday, the Japanese stock market, along with many others around the world, had some of the worst days in their history. Some markets dropped by double digits, investors were scared, and it seemed like the global economy could be on the brink of collapse. And then this happened. Just 24 hours after the Japanese stock market had its worst day since 1987, it had its best day since October of 2008. But there is something a little bit strange about having both the collapse and the bounce back happen within the span of, 24 hours. I mean, this is an almost unprecedented situation. So let's take a step back to the wild time of about 24 hours ago. The Japanese markets are crumbling, allegedly because Japan, which has not raised their interest rates in 17 years, raised interest rates twice over the course of the last 5 months or so, one of which happened just a few days ago. And investors, they don't like this, and they get scared that rates will go even higher, and they've been borrowing money from Japan for the last, 17 years. So they sell off a ton of Japanese assets, and the Japanese stock market crashes. Now, this panic and fear spreads through the global markets with mass sell-offs everywhere. And when the American stock market opens, stocks initially plunge. Some of the bigger stocks, like Nvidia, initially drop by 11% within the first few minutes of trading. However, something strange happened during this exact moment. You see, the popular trading platform Robinhood, along with tons of other trading platforms like TD Ameritrade, Fidelity Investments, Vanguard, and others, reported mass outages, errors, and halts to their trading capabilities. Essentially, what was happening that morning was many average everyday investors were at least temporarily not allowed to trade. So, as the minutes and hours went along, average people began to see their investments being wiped out and weren't allowed to trade stocks. And anyone who was invested in a company like Nvidia or Intel was able to look at potentially losing thousands or tens of thousands of dollars on their screen and were not allowed to do anything about it. However, you know who wasn't affected by this trading halt? Every hedge fund and multi-billion-dollar investment firm. You see, all of those companies were allowed to cash out or buy the dip or do whatever they wanted. But if you were an average person, you had to wait for all of the trading apps to let you trade again. Now, eventually, after most of the heavy losses came in within the first few hours, some of the trading platforms let their customers start trading again. And some cited that this was just a third-party issue or a technical bug rather than a trading halt. Some say that their system never went down despite mass reports. And others did say that they halted trading on purpose for the entire day due to market volatility.
So, how do you get fucked by the stock market? That's how. Oh, you can't trade. Well, yeah, but my stock's going down $20. It was 100 and now it's at 80. If you did a stop loss, are you getting out of it? I don't know. I'm not in it. I don't care. But that's what you normally do. So let's say you buy a stock at 50 and it goes to 100. And you put a stop loss in, which means if it goes to 90, sell it automatically. So that's why you do it. Now, this is a bunch of bullshit. This is a bunch of people shorting and it's going down just like comex. It's a fucking joke. And don't be stupid to think that they knew what they were doing. They were dumping and they wouldn't let you dump. Now, if you want to dump, you've already lost 10 more. And instead of dumping at 90, you're dumping at 80. So it's costing you a lot of money. That's why you don't want to play, because it's a crooked, it's a Madoff system that they got there. Madoff created the system, right? So this is my point. If you're in gold, do you ever have to worry about this? Never. Never, because you've got the gold in your hands. You never have to worry about it. You're in the stock market. You just got the shit kicked out of you. You didn't see it coming. Your stock's going down and you can't sell. What the fuck is that? Well, it's a gut. And you don't think the banks are going to do that? Yeah, I need to get my money out of Chase Manhattan. Sorry, it's a power. We don't know. The computer failed. We don't know how much you got. We can't give you the money until the system comes back up. Oh, okay. Can I take my money out? Now we're limiting it to $5,000 a day. I got 400 grand in that bank. Nah, but you can't get it. It's in there, but you know what? We're going to take it because it's really not your money. We're just holding. It's our money with your name as a credit to it, but we don't have to give it to you. This is the bullshit that goes on that you get fucked with, but you don't understand it. You don't realize you just got fucked on the stock market if you're trying to get out, which here comes the panic that I tell you that gold's going to go through. When people realize gold's your only option, the panic to get into gold is going to go through the roof. Much like the Titanic, when they realize the boat's going to sink and they all run to the lifeboats. That's what happened here. Everybody ran, and then they said, well, yeah, there's no more lifeboats, so we're sorry, but we're going to take all your money. And you're totally fucked. Now, the next day it goes back up is more derivatives. This is a derivative game, right? What do I tell you? The derivative for gold, they sell it here and it drops, and then they buy it and it goes up, and then they sell it and it goes down and they buy it. That's what they're doing here. There's derivatives going on and they're selling it, and it dropped, and then it dropped 1,000 points, and then they said, oh, okay, now we'll buy it on the dip. And we'll all make a fortune. That's what's the same thing going on with stocks. So on one end, we're seeing these leaders get in charge, and it's not even your voting. So in Venezuela, you're not voting for this. It's whoever Russia and China want in office. A lot of times it's who the U.S. In Ukraine, it's the U.S. put the guy in. You think Jenna's sitting there voting for it? No, she's not voting for it. Even if she is, her vote, it's like here, you think your vote's actually going to count? Jesus, man, that's just naive. I mean, I'm not voting because it won't count. They want you to vote because they want you to think it actually mattered, but we all know it doesn't matter. Kamala Harris will win because they'll print as many tickets as they need to get her to win. Trump's up 1 million votes in Michigan. Okay, so she needs 1,000,001 mail-ins. So let's start, getting that. At 4 a.m, people are voting. So it's a crock. Don't fall for it. All right, let's see what else.
Regardless, yesterday was a little bit of a conspiracy-laden day where large corporations had the freedom to trade and sell off their stock, while the little guy had to sit there and take their losses. It is a little bit of a strange thing, but maybe in the end it did miraculously end up helping out the the little guy. And that is because, well, the markets rebounded today in some countries. Like, as I mentioned earlier, Japanese markets rebounded by 10% today after taking a 12% dip yesterday. The Taiwanese market saw a 3.5% gain today after taking an 8% tumble.
Okay, so let's ask questions. Why did the market drop? Probably inflation, probably bad earnings. Why did it go back up? That's just bullshit. I mean, we see Warren Buffett took out $275 billion worth. Did he put it back in? No. So what drove it up? Oh, you mean the Fed printed money to drive it up? Oh, yeah. So it's not free market. It's the Fed trying to control the stock market. So you always ask yourself, and this is what you got to get trained. Why did it go down? Why did it come back up? So there's no reason if it goes down for it to come back up. Gold, we understand it's derivatives, right? We see gold go up to 2460, and then it's primed to go down because they can do put options and sell it and then buy it cheaper. So that's what's happening there, and we understand that. So we know it's all fixed. We know it's not real. But here it seems like the same thing. What? I thought people buying and selling lower the market. How did it go up? Who's buying? So it's just the Fed printing money and making, wow, the Fed's all over the world because this is Japanese and these other countries.
The day before, and the Turkish markets are up 2% after taking a 7% fall. And so, what does this mean? Some massive gains after a massive decline? Well, there are some historical examples just like this. Let's take you back to 2008, the glorious year when everyone lost their jobs, their homes, and their savings all at the same time. During the week of October 6th to October 10th, the Dow Jones in the United States lost 18% of its value and had 5 consecutive days of moderate losses. Investors panicked, and rightfully so. Average people were seeing their entire portfolio lose thousands or tens of thousands of dollars every single day. But on October 13th, after a very strenuous weekend, the Dow Jones saw one of its biggest gains ever for a single day. 11% gain in one single session. What was the reason behind this? Well, it was because this gain followed the announcement that governments all around the world would support and bail out any large bank. They would also announce to turn on the money printing to ease the pain and protect many businesses from bankruptcy along the way. Now, this was extremely controversial to a lot of people, bailing out big banks, insurers, and investment firms, even though they were the ones that caused the collapse in the first place. But regardless, the investors were quite happy and began reinvesting in the markets, leading to the October 13th, 2008 11% gain. However, after this massive one-day gain, markets kept falling over the next few weeks before having another massive single-day jump of 11% on October 28th of 2008. Now, if you were around during the financial crisis or have studied it, you know what is about to happen. You see, despite 2 of the largest single-day gains in the history of the Dow Jones within the span of 15 days, this was actually arguably the worst time period in the history of the Dow Jones. That's because markets continued to fall for months and months and months afterwards. In fact, the market would crater another 30% and bottom out on March 6th of 2009. So despite having some massive upward gain for some days, there were also so many more losing days that chipped away and wiped out all of those gains and then some. Now, that is the negative scenario that some investors are seeing here in the markets all around the world, but specifically in Japan today. You see, Japan's stock market has a history of having extremely long upwards and downwards swings that last for years or even decades. So here's an example. The Nikkei 225 between January 24th of 1986 and December 8th of 1989 had nearly a 200% gain over those 3 years and 11 months. Essentially a 50% average non-compounding gain per year. That's a wild number considering the normal amazing year that a stock market will have is about an 8 to 10% gain. However, after December of 1989, Japan's markets cratered. And do you want to take a guess when the Japanese market would surpass its high that it had in December of 1989? Well, it was February 16th of this year, just a few months ago. That's how long it took for the Japanese markets to rebound from its landslide of 1989. However, it is worth noting that the market in Japan has been steadily rising since 2012. But the point being is that Japan has a history of long-term market slides where you could lose not just weeks, months, or years of gains, but decades at a time. And that is worrying a lot of investors at the current moment, especially.
That's called inflation, everybody. You print, you lose. And that's what they did. And then they kept interest rates at zero, causing massive inflation. So the dollars are worthless. That's why the dollar is like worth 120. $1 buys you 120 yen. Everything's collapsed there. And they came out with a $10,000 bill, a $5,000, and a $1,000. So that's what you get with inflation. See, they never really understand it. So that's always the cause of the stock market crashes. You made the dollar worthless. So it's worthless. The purchasing power is gone. Therefore, you can't buy anything, and everything's more expensive because they need more money to get the same. So if I need $10 for a Coke, let's say I need $2 for a Coke. Now I need $5 for the Coke because the $2 is worthless. So I need $5 to buy the Coke. And that's what nobody gets. And that's why every market's going to crash. The whole world's going to crash except for BRICS because they're going to go to gold. And gold is the only way to survive. So let's see a little bit more of this, but it's all based on inflation. Japan, China, their stock market's worthless. And the US is a bunch of bullshit. It's all smoke and mirrors. Come on.
Considering that Japan has some major economic issues like its aging population, economic stagnation, and high public debt. However, that also seems to be a problem in most of the world as well, but it's arguably the most apparent in Japan. And there was one other time in history where a stock market had a historic loss followed by a historic gain. However, it had a much happier ending for investors than the previous Dow Jones example. And that was actually in March of 2020. After governments around the world announced the complete lockdown of their economies, the Dow Jones tumbled by 35% over the following weeks. However, on March 24th of 2020, the Dow Jones shot up 11.4% after the government announced the largest financial intervention program in history. And that was the stimulus program and money printing. And within the span of just a few days, the stock market went from having its worst days in its history to some of its best. This was then followed by the influx of new Robinhood day traders, the growth of Wall Street bets, GameStop, and so on. And as we now know, over the next few years, the stock market rose like crazy after that, and a lot of people made a lot of money. So those are the two examples that people are seeing right now.
Yeah, but so what he's not saying is the U.S. printed the money and put it in the stock market. It's not free market. It's not the Rolex watch. The stock market is JP Morgan printing, JP Morgan taking the money, putting it in the stocks. That's how the Pelosi's and all these idiots got rich, because they would then say, okay, we're going to put it in Amazon. So they'd buy Amazon, and then they'd shove $1 billion in Amazon. And of course, the stock would go up, and they all made money on it. It's incredibly illegal insider trading. But that's what he doesn't say. They printed the money and put it in the market. So that's what you did with your heavy inflation. You're stuffing it in the market. And that's why what they're doing now, because they're trying to have an election and say, look, the economy's great. Biden did this economy thing. He's our hero. And you're like, hey, this is all bullshit money printing. Money printing is not supply and demand. Money printed it'd be like me printing, you know what? I'm going to print $60,000 so I can buy a Rolex. I'm going to print $80,000 so I can buy the Mantle card. And I'm going to print $500,000 so I can buy the Jordan rookie card. I mean, that's what it is. So it's not really demand buying the Jordan rookie card. To a point it is, because you're buying it for the price. But the point is, You're just printing money to pay for it. So if I didn't print money, could I afford it and buy it? No, but that's what you have, and that's what the problem is. That's why the money transfer. So they print it and give it to themselves and the government. We don't see it. However, our defense is gold and silver. I own physical gold and silver. You can't fuck with me, and you can't print it. And in the end, I'm going to win because I'll have this gold and silver that'll go way up in value, and you're going to be stuck with Tweedledee and Tweedledum paper that, we go put on the wall. It's going to be wallpaper.
You have two key market examples of wild losses and gains within the span of weeks or days of each other, where one led to massive gains in 2020 and another led to massive losses in 2008. So maybe the real thing to keep an eye on here is actually volatility, because both of those times, the VIX, which is a volatility index, which people consider to be the fear gauge of Wall Street, well, that was extremely high during both of those times. And well, it was also fairly high yesterday and still appears to be quite high today. Meaning that despite some markets, like the United States and China, having relatively small losses yesterday, investors are terrified that we might be seeing a repeat of the 2008 financial crisis or stock slide, or we could be seeing a repeat of March 2020. However, obviously, it is worth noting that those stock market collapses occurred during financial crises. And as of this current second, we are not in a global meltdown.
Really? Did he just say we're not in a global meltdown? What the fuck does he think all this inflation is? Interest rates is a joke. We are in the middle of a global meltdown. That's why we buy gold. Hey, Luke, how are you today? Money printing is ruining this world. Well, yeah, we know that. That's why we're all running and buying gold and silver. Lost $2,000. I wish you'd get out of that market. Went from 80 in February to 120 in May to 70 grand today. So the question is why didn't you take your profits, young man? This is what we do when you gamble. When you're playing poker, you're playing blackjack, craps, baccarat. You win, take your profit. I mean, that's the basis. Do you think it went from 80 to 120? It was going to keep going to 200 or 500? That's what the Bitcoiners think, right? Oh, it's going to go to 1 million. 1 million what, by the way, because the dollar is going to be gone. So what are you talking about 1 million? You've got to put in, you make a bet, you win, you got to take it. You take the profit. You don't just keep. So we're playing craps and the guy's made 10 passes in a row and you're saying he's going to make 20 passes in a row. We're all looking at you like you're nuts. No, that doesn't happen. Maybe he'll get to 11. Eventually he's going to 7 out and then you're going to start losing. And that's the point. You must understand the game and say, I've made my money. Thank you very much. I'm getting the fuck out because I got to take profit because that's why I'm betting. That's why I'm gambling. You're gambling just as if you're playing blackjack or roulette. You are gambling on your things. What a yo-yo? Well, we know it's all price fixed, right? So it's not a yo-yo. It's JP Morgan printing money, putting the stocks up, and then pulling them down. So take your profit and get the fuck out. You blew your opportunity at 120. I'm surprised you didn't say something here in February. But if this happens again, you take your profit, except for in gold and silver, because they're not really free markets. When they hit free market, there's nobody going to be selling gold and silver for a long time. That would be the only thing I'd advise to just let it run. Like me, I'm in it at what, 16, 1700, it's 2400. I ain't going anywhere. It's still cheap, but for the stocks, you've got to take your profit. You've got to think of it as I'm betting football, I'm playing roulette, I'm playing blackjack. So if you start with $1,000 in blackjack, you get up to 2,500. You're not walking away going, "Hey, I beat Vegas," or you're just going to keep playing until you eventually lose it all. That's how Vegas survives, is they know people will not take their profit. They hate me because I take my profit. I started with 500 in blackjack. I get to 800. It's goodbye. I beat you. And I know that's very hard to do. And most people don't have my control to take it and walk away. And that's what you've got to learn. If you look at my gambling ones, minors are technically the cheapest of all time. I get it. But you just saw the market collapse. Japan, China, their stock markets are collapsing. It's coming here. China's housing crisis. Now we're going to have a housing crisis because everything's related. Because the Chinese people are buying houses here. Don't miss that point. You got all these billionaires in China. You think they trust China? Fuck no, they don't trust China. So not only are they buying gold, they're buying houses and putting their money in the banks in the U.S., which is why they're running our government. And then so all of a sudden, when they realize the dollar's going, they take their money and get the fuck out. And that's why they sell their houses and sell their stocks before it collapses. Look what Warren Buffett just did, right? Well, I just showed you that one. So Warren Buffett just sold $75 billion worth of stocks. So he's taking his, he sees a problem, so he's getting out, right? He took his profit. He doesn't just buy it, he does do selling. Now, if he had any brains in his head, and I doubt it highly, he would take $75 billion and buy gold. That's what he should do, and he can't lose, but he's too stupid to do that. So he wants to what? Buy houses and cars and stocks. He wants to buy things cheaply, but he doesn't understand his dollar will be worthless. But he's not intelligent. Everybody thinks he's so smart. He's not intelligent enough to take his profit and buy gold with it, which is what I would do, which is what I keep telling you to do, Luke. You had 120 grand. I'd have turned that into gold so fast your head would have swam. And you never work a day in your life. Well, you're in a good situation with all your gold and silver. You probably won't work a day in your life anyway, but that's it. If you would have put this 120 in gold, you just tell me what island you're going to buy. I mean, that you would have been set for life turning it into gold. So you're fucking around with dollars is what you're doing. And you're fucking around with stocks. And look what happened. It was closed for a couple hours. You couldn't trade, or trying to get your money out of the bank saying, sorry, you're limited to $5,000. If you have gold, you're not limited at all because you got the gold. It's in your hand and you just walk away with it and nobody can fuck with you. And this is why I'm surprised that you had 120. Okay, fine. I don't want to play Monday morning quarterbacks. Now you're at 70. Now what do? Is the market going up or down? We know what gold's going to do. Now you're in gold stocks, so you think the market will follow the gold stocks. Well, let's see. You had 120 down to 70, but yet gold went up. Gold went from 2,100 to 2,400, but the market went down. So they are not correlated as you think. So February, gold went from 80 grand in February to 120 in May. So that's when it did go up to 2,400 or 2,300. And then why did it go down? Gold didn't go down. Gold did not go down from May from 2,400. It's 2,400 now. Let's take a look at it. Gold's 23.90 right now at about 4 o'clock. Silver is like somebody wants to buy a lot of it. I guess the Saudis and they're mowing my lawn at 5 o'clock. The Saudis and the Indians need silver for their the solar panels. So it must be them wanting the price down to 26. I mean, I'm ready to go buy 100 ounces of it. We'll see. I'm waiting on the job. Even though I kind of thought I had it, and I went to the manager and said, "Thank you so much." She was a little bit surprised, but I think she understands. At least I was very happy to join her team. So I'm still waiting on what happened, right? I called my recruiter. He didn't answer. He didn't get back to me. He's not my regular recruiter. She's on vacation, unfortunately. But anyway, so I'm sure when I get it, he'll tell me. So that's what you have with gold and silver. So still 23.82. So let's say you said 120 in May, so it lost 50,000. So in 6 months, you'd have made 17%. You break even for the month, but for 6 months, you'd have made 17%. So, but you didn't make 17% in your stocks. So you're kind of getting greedy going, oh, the stocks are going to go up as the gold goes up. But as you can see, it's Madoff runs the stock market. Nobody, gold, it's the demand's through the roof. So even though Madoff runs the gold, it's not being looked at. So my advice is take your profit. If you started with 80 grand, I don't know if you started with 20 grand and went up to 80 and then went up to 120. Good play, but you've got to learn to take your profit. That's what I talk about bankroll in football. You start your bankroll at 5 grand, you make sure you win every week, and then you try to get your bankroll to 10 grand, and then you bet a little bit, and then you try to get it to 15 grand, but you don't risk the whole bankroll. So please be careful. Miners are technically the cheapest of all time. Well, whatever, but so's the money, the inflation. It's 98.5%. So you're talking in money that's worthless. So you don't forget that the money is being heavily inflated. So yes, you have it, but not really. All right.
Now, as I mention this often, some countries like Canada and Germany are currently in a GDP per capita recession, and so are, well, many other countries. But things at this current second don't quite seem to be like an emergency compared to how they were in 2020 and 2008. But there is an argument to be made that there is very little warning for financial crises and market collapses unless you really, really dig deep. I mean, in 2020, markets went from being pretty good in January to collapsing by March. 2008, the entire collapse started within the span of a few days, it seemed, and no one really knew what the problem was except for a few guys like Michael Murray, Alan Greenspan, and a few others who saw the core issues years in advance. And I know a lot of you are asking about why this video is focusing so much on global markets in Japan and sort of extrapolating it to the world and the United States. And well, here is why, and here is the core part of this video. People forget that in the financial crisis of 2008, it did not start in the United States in 2008. The first public signs began showing up in China of February in 2007, which was the start of a faltering economy and a housing market. Spain and Ireland also began having housing bubbles burst in early 2007 as well, which maybe should have been a sign that if multiple smaller economies had bursting housing bubbles, then maybe some of the bigger ones would too. Northern Rock, which was a bank in the United Kingdom, well, they had a bank run in 2007 after it was revealed that they were heavily over-leveraged in virtually every investment that they owned. Again, a very apparent sign from outside the United States that should have been a warning. In fact, I want to ask you guys this. Do you know what the first major bank was to go under during the financial crisis? Do you think it was Bear Stearns in the United States? Think it was Lehman Brothers? Well, it was actually the German bank called IKB Deutsche Industrie Bank. It went under on July 30th of 2007, and largely because it was heavily exposed to the United States real estate market. Ironically, just a week beforehand, things seemed fine and they thought they would actually hit their earnings goals and have a positive quarter. That's how fast things can change And that's why we should be paying attention to other countries' markets. We live in a globalized economy where, whether for good or bad, something that happens at the Suez Canal in Egypt can affect oil prices in California. And maybe, just maybe, a Japanese market collapse that showed that the United States investment firms might be trying to take out the cheapest form of debt and over-leverage themselves. Maybe that is something to pay attention to. Or maybe not. Maybe the rapid Japanese market collapse and the moderate rebound means nothing, and we can go on about our days because stocks only go up, right? What do you guys think? Let me know in the comments down below. But for now...
So this is why I keep showing you China, because China's collapsing. And the Evergrande, the banks, the people can't find work. They're not paying the Social Security. Try to get your money out of the bank, you're limited to $150 a day, and there's no houses to buy, and the rents are going down, down, down. So there's like 10 different things I'm showing you on China, and it's coming here because the Chinese billionaires are losing their ass, so they're not going to want to keep losing. They're going to grab their money out of our stock market and our banks and go to, well, they'll be in bricks and they'll buy gold-backed currency. It's another reason they're going into gold. You can't lose with gold. So it's a very easy, simple lesson. If you want to be in a highly risked stock market where it starts dropping and you can't trade for 3-4 hours, as Luke said, you couldn't trade for 3 hours. Or do you want to be in gold in your safe going, who cares? Who cares what's going on in the stock market? So like I told the guy on the bike the other day, I said, where's your money? Oh, it's in it's in the mutual fund. I don't know what they want. I don't need to talk to the chiropractor. If it was my recruiter, I would have taken it. But anyway, so he said, oh yeah. So I'm talking to the guy and he's like, I'm in stocks. And I'm in my 401k, my pensions and stocks or whatever. So I have that. And then says, well, it's going to crash. And of course, she doesn't believe me. Who am I? I'm only the professor. So nobody knows who I am. So nobody, I'm the wise man, but nobody wants to say, hey, let me pick your brain, right? These people aren't smart. They're idiots. So he goes to me, he says, well, so I tell him about gold and he goes, well, I'm in I'll see you in the soup line. And I go, I won't be in the soup line. I don't have any stocks. You're going to lose your ass in stocks, but I'm not in stocks. I'm not stupid. Because stocks are going to collapse because they're all overvalued because everybody's putting their money in the stocks thinking it's the safe play. Because nobody wants to buy gold because nobody understands it. And that's where you've got to understand it. I mean, just like Luke here, he's gambling on the stock market, but does he think he's gambling? It goes up. Does he understand he gambled and he won? Does he understand to take profit? He's blindsided thinking, oh, it's went from 80 to 120. I made 50%. Well, yeah, I could sell, but I'll let it go to 200,000 or 500,000. Is there a point that he thinks, okay, that's it? I should probably start taking profit. No, he could have taken the 40 grand out and bought gold with it and been at 80 grand with 40 grand in gold. But he didn't think like that. Why didn't he think like that? He knows about gold because I taught him about gold in Barcelona. So he should know to do as much gold as you can get. I'm glad he's got money, but I'm not glad he's got it in the stock market because we can see what's coming. You can see the big wave is coming. Get the fuck off. And that's what he's not kind of catching. He wants to diversify, but not now. Now is not the time to be in the stock market. I don't care if it goes up. We know the ending for gold, the happy ending will be way up there. We know the dollar's going out. It's 98.5% gone. So even if I am in the stock market, eventually it's going to crash, and eventually I won't be able to get my money out anyway. I'm more worried he's got 70K that he won't be able to get out of the market if he wants to. This is the problem. You've got to read it all the way through. Look what's happening. The trading was halted. What do you think is going to happen? Oh, sorry, you can't get to your account. It's broken, and they take all your money because really you don't own the money. You don't own the stock. If he has Newmont Mining, he doesn't own it. He has a right to it, but if it's E-Trade, they are the ones that own it, or JP Morgan. They own the stock, not him. So if they want to keep it, they will. Just like the bank. You go to Chase Manhattan with your 120 grand that he had, and they'll say, sorry, it's really not yours. We're gonna keep it. It's weird how the government will bail out the banks because the banks are the government. So the banks are basically bailing themselves out. Everybody thinks the government bailed it out. So few people can connect the dots that the banks are the government. They run the government. They are the ones putting the guys in, and the government, that's why they do the bail. Why do you think banks get bailed out and nobody else does? This Madoff thing, I was watching that again just for fun. And it was so ridiculous, the ending, when anybody who was in it who made money had to pay the money back. Well, what are you, out of your mind? That's like going to Vegas and betting Mahomes to win the Super Bowl. Oh, wait, you want $1,000? You got to give it back. Yeah, I don't think so. But yet they bailed out the banks. And then they interviewed some guys. Well, I guess that was the fairest thing, is to take the money of the people that made the money. No, that wasn't fair. Why didn't you bail out the people who lost? That's what you should have done. Why are you bailing out the banks, but you're not bailing out the people? Why aren't you bailing out the people that lost? Madoff fucked everybody, and basically you had no claim to go after money that they got. Nobody knew it was a Ponzi scheme, and you have no right, just like Luke went from 80 to 120. You have no right taking his 40,000. That's bullshit. Lucas, I think there's major opportunity. Oh, Luke, come on. I think there's major opportunity in the miners 10 times plus. Yeah, but not now. The market's crashing now. You're too fixated on the market. You're not understanding it's fixed. It's just they're printing money and putting it in, and they're not putting it in the miners. Why would it go from 120 in May to 70 grand today? Who the hell's selling miners because gold is going up? Or do they think gold's hit its all-time high? It's not going to go any higher. But again, you're missing the point. You're much better off with the 70 grand in gold. You're going to turn that into 5-6 billion. What are you going to do in the stock market? So what are you going to do when the dollar crashes? You're not kind of catching that point, right? So the dollar crashes, there is no stock price. But what happens to gold when the dollar crashes? It goes to the moon, because now there's no dollar. So the gold becomes the money, and then everything gets priced and the gold goes way up. I've been in this for 11 years, so not surprised. I think the miners will pull a Bitcoin. They have to go up with a raise in gold and silver price. They typically go 5 times higher than the gold silver. Yes, I understand that. You've told me that. But comex isn't the same as it was 11 years ago. You've got to enter the new variable, which is comex and BRICS. Comex going out and BRICS having a gold-backed currency. Those variables are not in your equation, so you have to figure out how to put them in your equation. So in 11 years, the miners will pull up Bitcoin. Well, they might, but in what value are they going to be? Again, you have a house worth 500 grand in money, but when the money goes to monopoly money, guess what? Your house goes to zero. It then gets priced in gold. So, okay, so what are you saying? The stocks are going to go to zero because the dollar will go out, and then it'll get repriced in gold, and then it'll be worth a lot more. Or you could just buy gold and not fuck around with the stock market. That's the underlining thing, that this is worthless. So you're going to go up 11 times what? Paper? That's what you've got to start thinking. Typically, yes. Typically, but is it typical? That's with a strong dollar backing it, but this dollar is worthless. So you don't want to be on the Titanic. You don't want to be in worthless dollars. Just hold the gold and let the gold go up 50 times. Gold's going to go from 5 grand to 50 grand. That's what, 10 times? And your risk is zero. And once we kill comex and go to bricks, you have zero risk and a huge return. And then you can go buy the miners if there's any value, if there's any stocks even available to buy after they get done wiping them out. That's what, look at plan B. So figure your plan B. Your plan A works under certain conditions, right? It works, let's say Paul Skeins, right? So he's good at home during the day, but he's not good during the night, or he's not good on the road at night, right? He's better at certain scenarios than others. And that's what you have here. You're assuming the gold goes to 10 grand, and therefore the stocks should go way up. Is anybody holding stocks at this point? Because the stock market's going to go out. It's going to crash. So you're going to make more money, but if you would just hold the gold, you're not satisfied with the 5 grand going to 50 grand. You're having a lot more risk than you're understanding because of this going out, right? This goes to zero. Goodbye stock. What's the stock market worth? Nothing, because they're all priced in dollars. So the financial sheet of the Newmont Mining goes to zero. You have no cash. You have no receivables. You have no payables. The inventory on your gold goes to the moon. In what? In dollars? Well, wait, dollars are gone. So that's really what you've got to understand. The dollar is gone. It goes away. Let's go to Rome. So you're in the Roman stock market and you're doing this. As they devalue and they debase the gold and silver out of the coins, and you're like, oh wait, okay, but what's going to make gold and silver go up? Because there's no comex at that point. Oh, it's the Ottomans coming to destroy Rome. Oh yeah, that's what's going to make gold and silver go up. So even Rome went out, right? The currency went out. It caused the Dark Ages because then nobody was in control. It was just a bunch of wars. So think it out. The dollar, gold goes up. So you're saying the stock's going to go up because the gold price goes up, which should make a lot of sense. But wait a minute, what's happened? You went from 120 in February and May to 70 grand today. So why did you lose 50,000 June, July in 2 months? Why are you down 50 grand? Gold has not gone down. What's causing it? The inflation making things more expensive, so their earnings aren't good. So just the fact that the gold price goes up, is that going to make the miners go up? Keep in mind, stocks are an auction. Am I going to want to be in Newmont, or am I going to want to be in Amazon or Microsoft or Apple? these are the other factors. I've thought about it and I agree with you, but I wait till the crash. As I said, all these the big shooters in Japan and China are going to need money and pull it out of the U.S. stock market where they have it. There is no China stock market. They don't trust it. So they're all in the U.S. stock market, banks, and housing. And they're all going to collapse because the Chinese are going to want their money. These are billionaires, right? Because it's communist. You either have billionaires or people working in the rice fields. So the billionaires have the money in the stock market are pulling it. And I don't think they're going to leave. Well, wait a minute, leave my Newmont mining alone, but take my Microsoft and Apple and Amazon. I think that it looks like they're taking everything. Otherwise, why would the gold stocks go from 120 to 70? You're answering your own question. It's down, but why is it down? Gold is not down in the last, I showed you in the last 6 months, it's up 18, 19%. So why are the gold stocks down? That's the part that you've got to ask yourself, why is it down now? Gold did not go down. The gold's at its high. It's near the 2400s. It was never more than 2480 for for a week. And then derivative down. So this is the part that you've got to give me that answer first. Why did it drop $50,000 in 2 months when gold didn't go down? That's what you got to ask. Stocks are at an all-time high. Mining stocks are at all-time lows. So that should tell you something. If stocks are at an all-time high, why would the mining stocks not be at an all-time high? Because nobody wants them, and it's an auction, and it depends. The price of the stock is an auction. All right, I got Apple. Oh, everybody wants. I got Microsoft. I got Amazon. I got Newmont Mining. Oh, wait, there's no buyers. Oh, I mean, it's not what people are buying, and I don't think they're buying. They're running to buy some gold, as you can see from Costco. They're buying gold there. They're not buying that much physical, but they're maybe buying Bitcoin instead of gold stocks, right? Although Bitcoin's getting crushed. So answer that question. The last statement, stocks are at an all-time high, but the mining stocks are at all-time low, but gold hasn't gone down. So why? That's you answered that question, right? Then you can proceed to Boardwalk. I assume when mainstream stocks correct, the dollar will move into both mining stocks and physical. I don't know that they'll want to be in stocks. So what did you think when the market went down 1,000 points the other day? Did it drive you into mining stocks or did it drive you out of the market? That's the question you've got to ask. When the market drops 2,000 points, are you running into Newmont Mining or are you getting out of the fucking market? Answer that question, and then you can move to Park Place, right? That's what you need to answer. Understand that psychology. Okay, so you're asking the correct question. You got to answer the question that you're bringing up, and that'll guide you to getting your money in physical gold and not dicking around with the market. Because when it drops 2,000, 3,000 points, nobody's going to want to go into the market. And why do you want to play with fire? Just buy the physical. Oh, I want to make 5%. Believe me, the physical is going to make you rich anyway. You put 120 grand. If you would have put 120 grand into the market, into physical, that's what you probably would have bought 55 of, let's say 55 ounces. Let's say 50 ounces, keep it clean. Every $100 you make 5,000. Or no, you make 500. No, I got 60 ounces. Every 100 I make 6,000. So play with me. You have 60 ounces. So every $100 the market goes up, you make 6,000. We go to 3,000. That's another 6 points. That's another 6 times 6, 36,000. And your risk is 0. We have no risk on the portfolio. You are losing money on the 120 going down to 70. Logically, you make sense, but it's not logic here. This is all price fixing. This is Madoff. This is the government putting all their money into the 4 or 5 stocks. That's the problem. So it's not free market dictating the stock price now. Stock price is probably 20,000, but they keep printing money and putting it into these 5 or 6 stocks. But guess what? They're not going into gold and silver. They don't want anything to do with gold and silver. They're shorting gold and silver instead of buying tons of it. They should. The U.S. could have bought 1,000 tons of gold by now. Instead, they keep playing this game of shorting it, and then they're in money. See, here's what the government doesn't get. Okay, you win. You played your stupid derivative and went down, and you win this. And what is this worth? Nothing. Put it on your wall. So they're not smart enough to buy the gold. Warren Buffett sold $270 billion worth of stock. Is he smart enough to buy gold with it? No. Guy's an idiot. The Oracle of Omaha. This is some fucking Oracle. Oh, yeah, I bought 1 million shares of Coca-Cola and Disney. Aren't I a great investor? Yeah, okay, buddy. Yeah, you know what you're doing. How much gold do you have? None? Oh, okay. I don't talk to idiots. All right. Oh, you're hitting me technically now. Okay. I assume when mainstream stocks correct, the dollar will move into both mining stocks. Why would you assume that? They'll go into physical, but I don't know about mining stock. No, when the market crashes, nobody's going to go into the market. Gold makes up for 1%. Miners make up for 0.01%. Okay. It doesn't take much for a move, for substantial move either way. Okay. The miners list BC of higher because of higher inflation cost. Well, that's not going away. It's going to get worse. There is no inflation cost in gold. You own the gold. You own the 1 ounce that you just bought. You own that. There's no inflation. Inflation's our friend, because as the dollar loses value, the gold should go up because it should take more dollars to buy the gold. We're also being helped by BRICS. So when BRICS raises the gold price, it's going to translate into physical. Is it going to translate into the miners? You're taking a leap of faith there. Are you right or wrong? I don't know. My thought is, why would anybody want to get into the market when it's collapsing? Are they reading the miner? Wait. Yeah, the market's collapsed 1,000 points, but I'm gonna buy the miners. Did you look on Monday when the market dropped 1,000 points? Did the miners go up or down? Did you check that out? I don't think I did. The miners lost because of higher inflation. Okay, which is not going to go away. I've invested in the junior miners, which are more risky. Are you going to get the reward for your risk that you're getting in gold and silver? Talk about return on your investment. Silver, my God, it's $26 an ounce. That's huge. That's huge return with zero risk. So you have zero risk in physical gold and silver. It can't go down. It can't be printed, so it can't go down. It can't get inflated. So when the inflation, we know, can't go away because it's money printed. And if you printed 21 trillion and the petrodollar, another 130 trillion, what are you going to do? All that money's coming back. It's going to be massive inflation. So what's going to happen to the miners? So you're not looking at the whole picture. You're saying, well, the inventory of gold will go up. How much inventory of gold do you think the miners have? How many tons of gold and or silver do they actually have in the mine? I don't think they have that much. They can only dig up 3.5 tons a year. So do you think Newmont Mining is sitting on 2 tons of gold and 5 tons of silver in their mine? That's going to drive their inventory up? I don't know. I mean, maybe if we got that number, but then your costs are way up. So this is the other problem. I don't have cost in my coin. I've got the coin. There's no cost. It's what's the value of this coin? Oh, 2,500. Okay, thank you very much. Oh, now it's 3,500. Do I have cost? No, I don't have cost with the coin. It's just coin. So I don't have to worry about the stock going up or down. When the stock market crashes, does anybody really want to go into the stock? And how many ounces or how many tons of gold and silver does the normal mine hold that you're invested in? Right? So you're in the junior miners, which are extremely risky. Some of them are IFCOM mines that they are hoping there's gold and silver in the ground. That might not be. So you're really risk taking, but I'm afraid of your reward won't be there. Or I think you can get the same reward with no risk in physical gold. As I told our Canadian buddy who bought a house with $700,000, and I thought he was out of his mind. You had 120 grand and you didn't put it into gold, physical gold. Luke, you never would have worked another day in your life. You'd have been sitting there and you and Bobby would be like throwing the baseball to each other. I mean, you would never have to sell tickets or sell tennis rackets because it's a no risk investment. You know, it's money. You know, the dollar's going out, and you know that's the only lifeboat. So when the dollar goes out, what's going to happen? But what are you going to do with your gold stock if the dollar goes out? Because it's valued in dollars. The miners have the gold valued in gold, but you don't. You have the stock. So it's like your money in the bank. You could have $1 million in the bank. Can you get it out? They're going to limit your transactions to 5,000. They're not going to let you just come in and say, "Yeah, give me my million," and put it in a big duffel bag like the Joker did. I don't think that's going to happen. I think you're going to struggle to get the money out. That's why it's so much easier to have all that in gold, put it in a white tube and walk to Switzerland, and we'll meet Egon and go, "Yeah, how you doing, Egon? Yeah, I got this gold. Can you cash it for me?" Think about it all. Think about getting your money out. Think about it. And as the dollar goes out, we know the physical is good, but is the stock market going to be good? If the stock market's crashing, are people running to buy Newmont Mining or the miners? So you are thinking of scenario A way back here, but we're not there. We're over here now. Like I say, you're thinking Paul Skeens at home, Tuesday night against Cincinnati, but now it's a Saturday night at New York at the Yankees. So it's a night game on the road. Is he the same pitch? Is it the same scenario? And I'm saying, no, it's not. He's probably better at home and against Cincinnati versus the Yankees. And maybe Aaron Judge hits him better than anybody on Cincinnati. So it's a whole different game. And I just don't think you're fully understanding all the variables. I think you're missing some. If it was me, well, what I did was sold all my stock and it's all in gold and it's all in my safe. Simply, I don't worry about shit. I don't care about what the market does. I'm only looking what's gold at. And I don't even care about that because I know, well, once Bricks gets into the game, the gold will go to the moon. So I'm looking forward. Well, let's see what happens in October. That's what I'm looking at. And when the market, and I think after the election, the shit's going to hit the fan because they're all holding it. And then if Trump wins, they're all going to dump. And then Trump's going to walk into a fucking nightmare if they let him win. I don't know. Can he protect himself from George Soros is the question. Can he make fair voting? We'll see. They control the paper price of gold, silver, and it affects the miners with gold in the ground. Yes, it does. If gold goes to $3,000, the miners will go higher. The miners will go higher, but more. Well, that's the assumption you're making. But so tell me why your gold stocks went from 120 in May to 70 grand in 2 months. Why did you lose 50,000 in 2 months? Because gold has not gone down. Gold's sitting there. Well, what did I just showed you, right? So gold. Come on, really? I hate when this site does this. It just doesn't. I can't get the site. It's too busy. Oh, come on. Unbelievable. I'm trying to prove a point. Well, I can't get it. It's sitting there. But I think it was pretty even. But again, your assumption is based on what? Right? A different environment, a different variable. When we didn't have massive inflation and when, is it price fixed? If gold goes to 3, the miners will go higher. Are you sure? You sure they're going to go up higher? So answer the question of you're at 120 in May and 70 now. Answer that question, right? That's the question you need to ask. Why did I lose 50,000? Because gold didn't go down. I shouldn't have lost 50,000. Let's try this again. All right, here we go. So in the last 6 months, you made 17%. In the last month, you made, let's call it 0.8. You lost 50,000. But why did you lose 50,000 when gold went up 0.8? It went up $18, or in 6 months, it went up 18%. So why did you go down from 120 to 70 is the question. That's what you've got to explain, because you're saying, well, it'll go up, so the stocks will go up even higher. I disagree with you. If the market's collapsing and gold hits 3,000, I think there'll be a big run on gold, and I don't think anybody's going in the market. I think the Chinese and Japanese are going to pull their money, and the Germans. The market's going to tank, and it's all the market tanking. It's not, well, wait, keep my money in Newmont Mining, but sell everything else. It's sell all my, get out of the dollar. See, that's what they want to do, is get out of the dollar. That's what the Chinese are doing now. That's what the Japanese are doing now. That's why you had the $1,000 drop. It got bought back up by the same idiot derivative people that buy the gold when it do the put option on gold to drop it when it goes up $80. So it's all bullshit. It's not real market. So that's another thing you're dealing with. You're not really dealing with a free market in the stock market, especially in your gold stocks. So yeah, maybe that worked. Does it work every time? I don't know. But gold's going to go to 3,000. So you're going to make $500 every ounce of gold. Now, what are you saying? I can buy, because the gold stocks are so low, I can buy them cheaper. But I thought the market wasn't perfect. I thought it was, if the market is priced fairly. So if it's $28 for Newmont, that's the price of it. So that's what you really need to understand and be able to explain why it went from 120 to 70. Okay, the inflation costs were higher. So if gold goes to 3,000, the inflation costs are still higher. So why is the stock going to run? And why did it drop? Because gold didn't drop. So if you held gold, you wouldn't have lost 50,000. If you had 120,000 in gold in May, you would not have lost 50,000. You would have made more money. All right, look, if the markets go, this world will be in chaos. No, it won't. Not if you have gold. Everything will be fine. They'll have to convert it all to a new gold-based currency, which they don't have in America. And mining stocks will have to go higher, or then they get nationalized. Well, I don't know how they can get nationalized, but this is really the point. No, the BRICS countries will have gold. Everything will be fine because their medium of exchange will be fine. It'll be gold. The problem here is the idiots in the U.S. who are doing these derivatives should be buying gold physical instead of fucking around with these derivatives, losing their ass in them, trying to keep the price of gold down, which has no bearing on anything. Just like Rolexes don't have a bearing. I would rather see you 120 grand in two Rolex watches than in your stocks, to tell you the truth. You can't lose in Rolex. You can't lose in physical gold. You're playing the only game you can lose in, which is stocks. Understand return on investment and risk. You're not understanding your risk. You just lost 50,000. Had you played Rolex or had you played physical gold, you didn't lose 50,000. So you're looking at reward, but you're not looking at risk. Instead of being in something with no risk, you're in something with huge risk and you're paying the price for it. You must understand risk and reward. And you're looking for the lowest risk with the highest reward. That's physical gold, period. Especially with the Basel III, where they're now asking for delivery. And China doesn't want to keep the gold price down because they're not using it for anything. Silver they're keeping down because they want to make solar panels and electric battery cars. So they want to keep the silver price down, but there's no reason to keep the gold price down, especially when you got 60,000 tons of it and Russia's sitting there with 20, 30,000 tons. They don't want the gold price to go down. They're like us. They're going, well, what are these idiots doing derivatives for? And they're just waiting for the physical price. I think once this recession is official, then they come out with gold-backed currency. But China's fucked. They're losing money hand over fist. Housing and banks and people can't find jobs. All these problems in China. They got to come out with the gold back. They have the gold back currency. We don't. So we're fucked because we're not intelligent enough. We want to keep printing and printing because, the MMT boys say, well, nothing happens if you print $25 trillion. What a bunch of fucking idiots running this place, running this asylum. I'm past 6 months. I've lost 19 too. Does it not ring a bell with you to buy the physical? And I went from 1,700 to 2,400. So I made I made $700 an ounce in, a year, 2 years. And I don't even care. I mean, I don't look at it like I just go, as much gold as I can buy because I know it's going to the moon. So why are you losing and why are you staying in a losing investment? Just get on the train with the gold and let the gold go up and make money on it without risk. You have no risk in physical gold because here comes BRICS. And they're trying to knock the price down, and BRICS and China and India just keep buying it and buying it and buying it. They're looking for 3,000 an ounce. You're dicking around with stocks and you're losing 19%. Well, I'm trying to help you, Luke, but I got to explain it to you in a way that you understand it and you can go, yeah, that makes sense. Because you're clearly missing the boat when you're losing money in a stock, but yet if you had physical, I've yet to lose. It's a no, you can't lose. You've got 4 aces. You can't lose with gold. And with the dollar going out, but then your stocks are getting hit with inflation. So all the capital and the whole thing that makes the mine is the costs are very expensive and the utilities are very expensive. And now the environmentalists are fucking around with the mines. So you've got all these extra costs. But if you have the physical, you don't have any cost. You're making an assumption of what used to happen. And I'll go back to New England. Well, they used to have Tom Brady, so they used to be a great underdog, but he's gone now. So I can't look at the New England trends and say, well, normally New England, well, they don't have Belichick and they don't have Brady. So you can't look at what happened with New England 5 years ago because they don't have Brady and now they don't have Belichick, which who cares? It was all Brady. But that's my point. They don't have them. So you can't say, well, this is what normally happens. That's what I mean. The variables have changed. Brady ain't there anymore. You can't look at New England trends because he's not. He's the variables change from Brady out. The variable on your stocks have changed with all these costs going up, all the inflation. And then the variable on the gold has gone and changed because of bricks. Now, if you buy gold, you're going to get this nice ride up the elevator because bricks saying we're going to a gold-backed currency. That's what you're missing. You're missing that variable. That bricks is the one that's going to make us rich because here goes the gold price. And it won't be priced in dollars because there won't be dollars to price it in. This is why I talk about Rome and what England did to France and what Germany was doing to England. They're dumping all the dollars, making them worthless. That's the point of it. So that's how these other countries went out. They printed their dollars to death. And that's what's happening now, right? 98.5%, according to Egon, is gone. And we're printing like, what, $1 trillion a quarter for the interest on the debt. Nobody wants to buy our T-bills because we have $36 trillion in debt. We are bankrupt. Why do you want to play stocks when the only lifeboat for the bankrupt country is gold? It's physical gold. You have the key that opens the door, and you're messing around in stocks, losing money, which I don't want you to do, when all you had to do is buy gold and you wouldn't be working anymore, nor would your kids. You would be retired because you're just waiting for the gold price to go up. And you would have had another 70 ounces of gold. You'd be swimming it. You'd put it in your bathtub. And like Bobby puts it under his mattress. You do the same. You wouldn't be working anymore. You'd be all done. Your brother wouldn't need to sell tickets. He'd be all done because it can't lose. It's a lock. You can't print it. It's gold. There's no expense to it, right? There's no inflation that hurts it. Inflation actually helps it because as you print, the dollar's worth anything, the value goes up. Now, they can do these derivatives a little bit longer, but it's going to end, and BRICS is going to end it. You're going to make a fortune on gold. So why do you fuck around with stocks for? Well, I can make 3% more. No, but you just lost. So you shouldn't be losing in stocks, on gold stocks, because the variables have changed. We're in a different game. And you've got to open the eyes and say, wait a minute. Yeah, normally the gold price goes up, the stocks go higher. This is not normal. And with this huge inflation, that's not going to happen. And maybe it will, but why would you take the risk? I've been 30-30-30 in physical gold, silvers, and miners. In past 6 months, Silja ETF miners has gone up 26%. They are correlated. I assume my juniors are just way more risky. Well, yeah, that's for sure. Should have just had it in silk, then would be a different story. Yeah, but are you in the ETFs? Why are you in the ETFs? Do you think you own silver? I assume that's a silver ETF. Do you trust Sprout that he's honest? And are you in it because you think you own gold or silver in the ETF? You don't own gold or silver in the ETF. And it's in dollars, right? So here's my portfolio. 90% gold, 7% silver, 3% mantle cards. That's my portfolio. And it goes up every month. I get a little bit with these derivatives dicking around, but basically I'm just waiting. I'm at the elevator, just pushing the button, waiting for the elevator man to take us up 10 floors. No risk in the portfolio, like a James Bond movie. That's really, I'm looked at return and risk, and I'm in no risk and huge return. You can't do better than that. You're in risk with a good return, but again, are you in the ETFs because you think you own gold? Because otherwise, ETFs are lousy. You don't make as much as you should. I would just buy the stock of the ETF if you wanted to do that, but I don't want you in stock. You're still in stocks. You're still in paper. You're still on the Titanic. Get the hell off the Titanic. That's the point. Get into the lifeboat. Buy more gold, buy more silver, but don't sit there in an ETF. Why are you in an ETF? So you're not going to get the gold or silver because there's no gold or silver in an ETF that you're going to be able to get out. That's not going to happen, which leaves you hope it goes up, but then what happens when the dollar crashes and the ETF is in dollars, goes to zero, except for your silver and gold can't go to zero. It's impossible because they won't inflate it. It'll go to zero in dollars, but it won't be priced in dollars. That's what I keep saying. You'll buy a house with 2 ounces of gold, and you're worried about a 30-year mortgage. I'm saying you won't have a mortgage. You'll own the house with the 2 ounces of gold. So let's say I come into your tennis store, and you're selling rackets $500, and I give you 3 ounces of silver, and I own the racket. There's no mortgage on it, and you're going to take it because the dollar will be worthless, and your $500 tennis racket's in dollars. In silver, it's far cheaper in silver, right? 3 ounces of silver would be probably the cost of your racket. So here's 3 ounces. Give me the racket. We're good. Because again, you're in inflated dollars. Your $500 inflated dollar price, push it into silver and it goes to nothing. I was looking at the ZIG versus the euro because that's how it's priced. So I saw that yesterday. Let me find it. So this is the gold-backed Zimbabwe dollar, the ZIG. One ZIG is ZAR 198, which is basically $2, which is basically, I think the ZAR is the South African dollar. So one gold-backed currency gives you 2 Saudi dollars. So let's go here. So $1 equals 1840 ZAR, South African rands. So we saw it's 2 to 1. So the ZIG is now only 9. When they did the South African dollar, it was $1 bought you 30,000 South African dollars. Now $1 and you get it's $9 for a ZIG for gold-backed currency. Look at 30,000 to 9. That's how much the gold will be worth. That's what the SAR is, South African Rand. So it was 13 when it started. It's down to 9. Soon it'll be more than the dollar. That's what the gold-backed currency does, right? It lowers the prices and it makes it much more valuable. And it's working because nobody's complaining about the ZIG. And if I was to sell my gold, I would want to buy ZIG until the gold-backed BRICS currency came out. And that's what I'd want. The last thing I'd want is either of these boys. I don't want either of these heavily inflated, worthless pieces of paper. My loss compared to May isn't as bad as what I said. I forgot I took 17 out from my car. Okay, that's good. And actually have 77 now. So it actually corrected from 120 to 94. Still not good. Yeah, okay. So losing 26,000 is not as bad as 50. And you were able to get the car and you're still over your 70. And my question to you again is, why do you have 94 in stocks? I would take at least 30 of that and buy gold with it. And you still have plenty of money there. And stop worrying about your freaking house mortgage. You think they're going to, I mean, you don't even know what the value of the house is going to be once the dollar collapses. I just showed you the ZIG's 9-1 now. So you got a $500,000 house in heavily inflated dollars. Once it turns to gold, it's 20,000 for a house, and your gold's going to be worth 20,000. You can say, here you go. So you're looking at, you think the value of the house will be 500,000. It won't be. That's in heavily inflated dollars. It takes 500,000 of these to buy a house. But if I have gold, which we know right now is 2,500, so gold goes up to, let's say, 10 grand. Let's say 5 grand. So gold goes up to 5 grand, right? And then the dollar, the value of that 500,000 is not 500,000 anymore. Let's say it's 50,000 gold, and your gold's worth 5 grand. That's probably, let's say, what I'm saying, it'll be worth 10,000 in gold versus 500,000 in worthless dollars, heavily inflated dollars. So the prices will all get tweaked to gold and silver. That's why there's no barter. What are you going to pay? What's the dollar going to be worth in silver? You go to the grocery store for milk and butter, it's $3 in inflated dollars, but what's the price in silver? It's not $3, it's about 5 cents. If they revalued milk into silver, that would be huge. That would dump it back from, let's say, $5 to 50 cents. Now you walk in with you don't even want a 1 ounce silver. I mean, that's going to be worth $50. So they'll have to have change, though, at the grocery store, right? They'll have to revalue it to a tenth of an ounce of silver. You walk in with your ounce of silver, they give you back 9/10 of an ounce as change, and you get your milk and butter. That's how it'll work. That's why there's no barter. Barter. Jesus. Yeah, here's my barter. Yeah, I want a house for my Mahomes card. As things get priced in the gold, so you won't be looking at a $500,000 house. That's in inflated dollars. They'll need to revalue it into gold, and maybe 2, maybe 3 ounces of gold buys the house because it's not worth 500,000 anymore. It's now worth gold. It's now worth 2 ounces, 3 ounces of gold, and you give them the 3 ounces, you get the house. There's no mortgage. What are you going to do? Go to Wells Fargo and take out a mortgage? Yeah, I want to put down 3 ounces of gold for the house. What are they going to do? That's your house. That's it. That pays for the house. You don't need them. There's no mortgage. With gold, there's no interest rates. It's 2%. There's no inflation. So they don't need to charge interest rates. Interest rates are because of inflation and the printing. Not with gold back, you have maybe a 1% interest rate. Okay, still not good. So still down 20% for physical gold. 17. What is the potential? What are we talking about here? So still down 20. So you're down 20% versus physical gold, 17% up. But what is the potential? Of what? The potential of the gold will go to the moon, and the potential of gold's, I don't know, 100,000 an ounce potential. More than likely, it's 3 up, and then bricks comes out, it'll be 10. So on a percentage, it goes up 4 times, 400%, because it's at 2,500. So 10% or 100%, it's 5,000, and then 7,500, 10. So 400% with no risk on gold, and your stocks go to zero because there won't be dollar. So you tell me, do you think you have a 400% return coming on your ETF or stocks? I don't know. But are you an ETF because you think you're getting physical gold, or are you just in it because you don't know and you're in an ETF to make money as it's a stock? You're not going to get gold or silver out of that ETF. I do not. I tell you, don't be in ETFs. They're not going to pay you the gold. Otherwise, why be in it? You're probably better off in the stock. But you're not good in stocks, as you can see Monday. So you're better off in that. So let's see what's going on in the stock market today. Stock market Dow ends over 200 points lower, August sell-off. And then it's the song and the dance what happened. Nvidia stock falls 5%. Chip stocks sink as Wall Street calls out tremendous. Saying Wall Street calls out tremendous opportunity after sellout. Yeah, of course, because they want the commissions. Tremendous opportunity. CNBC stock market news for August 7th. The Dow ends over 200 points lower. So he lost 1,100. I don't know what they gained yesterday. Now they're down 200, and they'll be going down and down and down because of the derivatives. How much has the stock market dropped? Fell 234 points after rising as much as 480 in the morning. So what caused it to change? You're up 480 in the morning, and then you close down 234. So you lose 700 points. S&P closed, NASDAQ closed down, the Dow. Then they'll try to song and dance. Well, this is what happened to the market. Yeah, like they know. What stocks are doing really well today? Why have the stock markets crashed? Economic conditions, catastrophic events, or speculative elements that sweep across your, basically inflation. So look at the risk and the reward. So your risk is you can go down more, but your reward is much higher. So what you want to do is play the least amount of risk for the most amount of return. That's economics right there, right? So if I buy an ounce of gold, my risk is 0. My return's 300-400% at least more. And the other risk is this going to 0, which has got to be factored into your equation, which you're not factoring in. You're not factoring in this going out. That's your other variable that you need to understand and you need to factor in. Because when this goes out, the only lifeboat's gold and silver. Silver will get the push because gold will be so expensive that your only option is to buy silver because you got to get out of this, and gold and silver are real money. And silver will be cheap. What, $26 today? Are you kidding me? Yeah, that seems right. Let's see. We got heavy inflation and silver's going down. Wouldn't it cost more dollars to buy the silver? I mean, that's the problem. This whole communist fixed market is a fucking joke, but it won't last, but it's a fucking joke. And people don't understand it. Even if Mark McGuire tries to explain it as a siloed ring fence and casino chips, nobody quite understands what the fuck he's talking about. But that's the point. It's you're printing the dollar and to death because the MMTs, and you can't print gold. That's all you really need to understand. Well, gold will go down. It can't. How can it go down? It can't be inflated. All right. Gold miner will soar at 3,000 gold. ETF is with the miners that have gold in the ground. But again, are you buying the ETF as stocks, or are you buying the ETF with the intention of getting the physical gold? In other words, you buy the ETF, you go, oh, I got 10 ounces of gold. You don't have any gold, and you'll never get any gold out of the ETF, especially Sprott. So if you're buying it to buy the stocks, why don't you just buy the stocks, because they're charging you a lot on the ETF management of it. So all these hidden fees. I think I'm going to sell another 10K and get some more gold coins. I'm still not convinced until the entire system goes. So we're on the Titanic, and Luke is not convinced the boat's sinking because it's like, here's the water level, here's the boat, and here's Luke. Well, I'm not convinced until the boat goes down to the bottom of the Atlantic. No. It might not sink. That's Luke right now. So he's, when gold goes to 3,000, and that'll be October. I mean, that's bricks, right? I don't know that the miners will go. And again, they're in dollars. You're pricing things in dollars, and there won't be dollars. Just ask the Romans. Selling the other 10K, I agree with. I'm still not convinced until the insect. Well, the system will work if you have gold-backed currency. That's what the BRICS are going to do. Their medium of exchange will be gold-backed currency. They'll use that to pay people and to buy things. The system itself is, we need a medium of exchange. It used to be pigs. It was tulips in Amsterdam. Anything that I'll go work for 10 tulips, and then I pay my rent with 3 tulips, go to the grocery store with 2 tulips. It doesn't matter. It's fine. As long as people will take it and buy it and sell it, it doesn't matter what it is. So the system's fine. The system won't collapse. It's the medium of exchange that's collapsing. That's the collapse part. All you need to do is come out with gold-backed currency like the BRICS, and you're fine. And then you move to Russia and you go, here we go. You're fine with the gold-backed currency. That's my point. You have the system of, as we talk, Adam Smith is fine. Supply and demand, Say's law, supply creates demand. If you leave the market alone, the market will do wonderful. They asked Thomas Sowell today about the market and really, how does it grow? There's demand. People get paid, so you need jobs. People get paid. And here, I'll show you Thomas Sowell. Tommy, baby.
Complicated than that.
So Thomas Sowell on basic economics. I highly recommend anything Thomas Sowell. He is Austrian like we are.
Welcome to Uncommon Knowledge. I'm Peter Robinson. Be sure to join us, by the way, on Facebook.
And by the way, Thomas Sowell is dead, just in case. This is 13 years ago.
Facebook.com/UNC Knowledge. An economist, syndicated columnist, and best-selling author, Thomas Sowell is a fellow at the Hoover Institution, Over the course of his long and storied career, Dr. Sowell has taught economics at institutions including Cornell, Amherst, and UCLA. Dr. Sowell's latest book, a revised and updated version of his classic volume, Basic Economics. Here is the first edition of Basic Economics, and here is the new edition showing that Tom Sowell never rests. To quote from Basic Economics, through its various editions, the fundamental idea behind Basic Economics remains the same. Learning economics should be as uncomplicated as it is informative, close quote. Welcome, Tom. No charts, no equations, all words, plain English.
That's right. No graphs.
No graphs. No graphs. All right.
See, that's Austrian economics. That's why I never use charts or graphs. And that's why when people challenge me, they want to, inverted yield curve and the, what do they call it? I don't know, some of their words. And I basically go, I don't want to hear Keynesian. We don't have graphs or chart. We use examples of theories. Supply creates demand. It's not a chart. It's a graph. It's people make money and then they demand what they want for it. And you make a blue shirt because I want a blue shirt because I made money to buy the blue shirt. It's simple. That's economics, not, well, pi r squared equals 42 or something like that.
Well, would you help me to uncomplicate a few things today?
All right.
All right. Segment 1, the present crisis. Now, I posted notices several places that I'd be interviewing you and asked folks for questions and got overwhelmed with questions. I can only offer a few, but here are some. From Ken Sweeney of Ricochet. This is the basic of the basics. How is wealth created? And why does the United States have the highest per capita GDP of any major country?
We got the most wealth.
How many years do I have to answer this question?
It's television. You've got about 90 seconds at the most.
Oh, I guess wealth is created when the circumstances are such that people who know how to create it are free to do so. One of the things that pains me in the current crisis is people saying that Congress really needs to do something to make the economy recover. No, they need to let the economy recover. That the economy did not get to be the biggest in the world by politicians doing things. All the millions of other people whose names we don't even know, those are the people who made it the biggest economy in the world. And if politicians will get out of their way, we can and let the economy recover.
So what he just said is the invisible hand, right? Let the market go. Laissez-faire, that's laissez-faire economics. Get out of the way, let the market happen. Let the competition happen. Whoever does it the best wins, and it wins by people buying the product. That's exactly what he said, but he didn't realize what he said. It's laissez-faire economics. Leave it alone, get out of the way, no government interference, just let me sell, typewriters, and let Luke sell typewriters, and whoever sells the best typewriter at the best price wins. And there's a big enough pie for us both to win, and that's how the economy grows. We make really good ones. There's a huge demand for typewriters, and more buying and more buying. We hire people because we need people because we're making so much sales, and then we buy the parts. So the parts people. So it'd be like buying houses. So we need the lumber and we need the painters and we need, so as let's use houses instead. So we both build good houses, but as it's such a good price and a good demand, we need more wood, and then we need more plumbers and more paint and more electrical and more electricians. And we hire all these people. Well, that's what grows the economy. It's grown by the productivity of the people, not by printing fucking money. That's what destroys the economy, is when the government just prints and prints and prints. No, the economy's got to be productive. Because we're selling houses at a good price, people are buying them. We need more lumber. We provide jobs. That's how the economy grows. What they're trying to do is print money, which doesn't grow the economy. See, so let's say we needed $1 million, me and Luke. That's how much money should be in circulation, $2 million. But when there's $20 million That's the inflation, because there should only be 2 million between us. That's what we need. But then, okay, then maybe we need more because the workers then go to Target and they go to Kroger's. They need food. They need their own houses. They need to buy cars. So you can see how the whole economy, and you need enough money for the productivity. But when you print more money, then we need productivity, which is what's going on now, is when you create this inflation because you're not going off the gold standard. And that's the problem. The system will have to get converted so people don't lose everything. People are going to lose everything because they're not in gold. Thank God for my Bitcoin investment. That saved my ass. I've never seen anything like it. It was considered good for the banks for a house loan. I don't think they looks at physical gold at all. No, banks don't look at physical gold, but so what are you saying? You use Bitcoin for a house loan? So you got a house loan with Bitcoin? Really? Wow, that's strange. So you made money in Bitcoin, and then you bought these gold stocks, and you bought your gold and silver. Okay, well, it's fine but get out of the Bitcoin, right? So just like you're playing poker or blackjack. So you had a big run at blackjack and you made $100,000. So get out of it now. Take your money home and go take it home, put it in the gold. So I hope that's what sounds like what you did with Bitcoin. But that's it happened to work. There's a lot of investments. The gold investment, or the stock investment, you're losing on. So do you think Bitcoin's better than stocks? Well, you got lucky with Bitcoin, but now Bitcoin's going down. But so is the stock market. Oh, wait, so is the housing market. And the dollar has lost its value. Oh, wait, there's nothing good to get into except for gold and silver. And the banks won't. It was considered good for the banks for a house loan. I don't think they looks at physical gold at all. Well, if they do, they're going to look at it at face value. So they maybe see the spot price of the gold at 2,400. Maybe that's what they give you. Maybe they give you the $50 that it's worth on the face of the coin. I don't know. If you're ever traveling with gold and you're worried about the 10,000, I wouldn't worry about it. I would look at it as face value and say, oh, this is only worth $50, not 2,400. See, it says it's a $50 gold coin. That's how you get out of it. You say, look at the face value. Anyway, so back to Mr. Son.
Tom, we've been talking about the crisis. Let's take a step back. 1983 until 2008, the American economy experiences a quarter of a century of nearly uninterrupted economic growth. Then, beginning in the autumn of 2008, trouble. What went wrong?
Well, actually, it started much earlier, and I think it was the housing boom, followed by the housing bust, which occurred in 2006.
2006,
so the reverberations of that is, there are people out there who had trillions of dollars invested in securities based upon mortgages, and when people stopped paying their mortgages, the value of the securities vanished into thin air.
So you do not argue that this was a financial crisis that spilled over into the real economy. You argue that it was a problem in the real economy, particularly the housing market,
yes,
that started the problem in the financial sector.
Oh, absolutely. If people had kept paying their mortgages, the securities would have been good, and we would have all lived happily ever after. Now the problem is that the politicians made the mortgages more risky by changing the rules. In other words, at one time, mortgages were considered the safest investment. This is for the widows and orphans who need their money coming in regularly, and you put it into real estate. But the politicians decided that we must have more home ownership and more affordable housing. And so they began to prescribe rules. You had to lend money to people you wouldn't have lent to before. And of course, there was a reason they weren't lending to them before. And we discovered the hard way what that reason was, that they weren't likely to be able to pay them back.
Very important.
Now, that actually started in 1997 with Willie Clinton. Clinton was the one that did this mess. And and I heard it, and I knew that was going to happen in 1997. I knew that was going to be a problem. I stayed out of real estate trust and banks and everything else back then, because as soon as you do something stupid, but notice nobody changed it. So he did 1997, and then like Chase said, no, we don't want to loan the money, and he forced them to. He was going to penalize them, and if they didn't take the loan, so they started to take the loans, and he said, well, if you have a problem, we'll bail you out. So that was done in 1997. In 2006 they did. So that's when Batman in that movie says he saw it in 2006. I saw it in 1997. I'm always looking ahead. So when the ice hits the Titanic, I know the boat's going to sink. Luke wants to wait till we're halfway in the Atlantic to say, yeah, I think the boat's going to sink. I'm way ahead of you guys. So I've been saying buy gold for 3 years because I know what's coming. You can't print like this, and that's what inflation is. But I know what inflation is. Everybody thinks it's prices, so they're waiting for the prices to go up. No, it's the printing is the inflation, not the fucking prices. Mr. Luke, yes, I'm out of Bitcoin now. Okay, good. I should have put all into physical, but put in miners. That's okay. Actually, not all. I bought a bunch of physical, made 300,000 in Bitcoin, but now I have 200K now in physical gold, or does that include your silver stuff? Because the gold's worth a lot more than the silver, as you know, and it'll always be because it's the gold standard, and the banks are sitting on gold, not silver. So there's much more demand for gold, but the demand for silver is more in the solar panels and batteries, but it's there. Should have put all into physical, but well, you didn't know me back then. I didn't travel to Barcelona at the time. Actually, not all. I bought a bunch of physical. Oh, you made 300K in Bitcoin, but now I have 200K now in physical. Okay. Yeah, I mean, so the Bitcoin wasn't bad. You did well, and then you got out. That's what I want you to do with the stocks. You took whatever in Bitcoin and you made 300K and you sold it. You took your profit, which you should do, because it's not going to keep going up. That's just, that's a fantasy. But now you're stuck in this gold stock, but it's going down. And what I'm saying is take your profit and get the fuck out and get into the one thing that can't go down, which is gold, right? Because physical can't go down because you can't print it. Well, at least it won't be inflated. And with BRICS doing its thing, it'll go up. And you see they're trying to hammer it. And you see this, the JP Morgan derivatives trying to push the price down. But they're trying to push it, but it's still 23. It's like 23.90. So it's not, and then it'll dance back to 24. And eventually, once it blows through 25, I believe it goes to 3,000, because I don't think there's anything that can stop it at 25 once it goes to 25. But yeah, so it's Austrian economics is what they don't want you to know, because then you'll pull back the curtain and you'll see the wizard, some idiot guy. That's what they don't want you to see, is that, oh, wait, if I own gold, I can't get hurt. The government wants to hurt you so I don't know if the government wants to hurt us. They just want to keep printing money. So it's in their best interest to not use gold, because they can keep printing and printing and printing. And if they keep printing and printing and printing, the gold, the dollar goes down in value, but they have all this dollar. So like Warren Buffett keeps printing the dollars, but he doesn't understand every trillion you pay quarterly for the interest on the debt makes the value of your dollar worth less. I mean, look at it. 10 years ago, you didn't have any billionaires. Now it's bullshit. Everybody's a billionaire. Well, wait a minute. If we translate that to gold, he's probably got 80,000. He doesn't have a lot. Anyway, this is interesting.
Question here, I think, anyway. Did what happened indicate the housing market problem? Did that indicate that some markets, wonderful as they are, wonderful as you demonstrate over and over again in basic economics that free markets are, that they sometimes experience troubles, calamities even, that the markets are imperfect because they're rooted
Exactly,
in human
gold and
experience and we
silver.
live in a fallen world? Or did it demonstrate that the government messed things up?
The government messed them up. After all, for a century, you never had this kind of crash in the real estate market. For centuries, people did their life's work lending money for mortgages, did that without the politicians interfering. Once the politicians start.
See, laissez-faire economics. Leave it alone. Get out of the way. Let me deal with Luke and free trade and no government bullshit. We don't need the government bullshit. All they do is get in the way. But then they'll try to create the problem and then they'll come in and bail them out. If you didn't do it, there wouldn't be a bailout. But why are you bailing them out? Basically, you're rewarding them for losing because they went along with the plan. And you said, well, yeah, we know you're going to lose because we're forcing you to lend money to people who don't even have jobs. You can't pay it back. But, even though we did that, we'll still go from there. We'll bail you out. But then in the Madoff case, why didn't they bail out all the Madoff people who should have been bailed out? They got blindsided. They trusted Madoff was real, and then they lost. So why would the people who make money in the Madoff thing have to pay it back? That's absolutely ridiculous. They didn't know it was a Ponzi scheme. They just assumed that he really knows what to do. He's got a stock place. He makes money on his stock picking. So why would I think anything of it? I trust him. So here's 20 grand and I get 15% a month. So why do I have to pay it back though? I mean, that's ridiculous. Gold and silver, I split them. Yeah. Well, I would be buying more gold right now. Because again, gold will go to 5,000. Silver, it's going to take a while. So you go from, let's say, $26 to $50. Is that really going to impact you? But if you buy the gold and it goes from 2,400 to 3,000, that's $600 an ounce that you make. Yeah, and that's some big money. I guess the golds are like for your houses and your cars. The silver is for the grocery stores and the restaurants, right? We'll go to Capitol Grill. We'll be paying with silver. You go buy the house, you're going to use gold. So think about it like that. You've got so much silver. I would just be pounding gold right now because you're not going to be able to find it soon. What is it? 2380. So it's about 2,500 on eBay. So you go to the store, it's going to be close to 2,500. So yeah, how much longer is it going to be there at 2,500? When gold hits 3,000, now you're going to be paying 4,000 for it. And if Egon says 3,400, I don't know because it's a chart, so I don't trust it. But let's say it's 34. Now you're paying 4,500 for an ounce of gold. How much do you have to buy the gold? And you could have bought it now at 2,500. That's the point. Before you could have bought it at 1,800, but nobody's listening to me then because nobody knows who the hell I am. Now they know who I am, and we've been buying it 1,700. I bought this at 250 an ounce. I bought a few quarter or half ounces at 250 an ounce, after I got my master's. It's the best thing I learned in master's was gold, and Austrian economics. It was amazing. He said Austrian. I said, "What the hell? What's that?" I had been to undergrad at a college. Nobody mentioned Austrian economics or Keynesian economics. I'm not sure they mentioned laissez-faire. And from what I get to most people, they laugh at it. Oh, it's laissez-faire economics. It's invisible hand. Oh, that's so stupid. And those are critical, but yet people laugh at them because they don't know what the hell they are. So instead of learning what they are, they don't. But he's just saying it's laissez-faire. Keep the government out. Let the market run. That's what you need. That's all you need. Let the market run and everything's fine. But when you start intervening and raising rates and lowering rates and inflating the money, that's why people lose, because these idiots are printing the money because people say, oh, that's fine. You can just do MMT and print and nothing can happen. I got some oceanfront property here in Detroit for you. That's how stupid it is. All right.
Meddling. The results were what you could have predicted. It's what was predicted, in fact.
All right. Response to the crisis. The Federal Reserve floods the financial markets with liquidity, while
Inflation.
first the Bush administration enacts stimulus and bailout packages that now amount to, as best I can make it out, something like $3.6 trillion. Correct responses to the crisis?
No.
Did the government do the right thing?
No. Those are easy questions.
Exactly. They are easy questions.
All right.
One of the painful things, I mean, you can call anything you want to call it. You can call it a stimulus. All the data indicated didn't stimulate anything except boondoggles across the country as politicians handed out money to all the special interests that they are interested in pleasing. But for example, when they dumped all this money in the banks, the idea was the banks would then pass that money on and more lending.
Right.
Lending went down. They dumped all this money into the businesses. The businesses reduced their investment. All kinds of money is piling up. There's record amounts of money piling up.
What about GM? Surely that's the one success story. Workers are still employed. GM is now a competitive company again. They're paying back billions to the American taxpayer.
Oh, this is the famous one where we guaranteed them and it didn't cost the taxpayers a dime.
Right.
Yes. It's like going to Las Vegas, and saying, I put my quarter in the machine and out came $100. Yes. Now put another quarter and see if you get another 100. And put $1 million in there and see if you get $1 million back. We had the same thing with the savings and loan crisis a couple of decades ago. They said, we're back in the savings and loan industry, we're guaranteeing it, but it's not costing the taxpayers anything. Well, it's not until it fails, and then it costs the taxpayers.
All right. Segment 2. What is to be done now? Fed Chairman Ben Bernanke announced this past autumn that the Federal Reserve would engage in a new round of, quote, I'm using his term, quantitative easing, the so-called QE2. The Fed will purchase, Tom, wipe that smile off your face. This is serious. The Fed will purchase some $600 billion of Treasury instruments to keep interest rates low and spur economic growth. That's Ben Bernanke. On the other hand, we have our colleagues at the Hoover Institution, John Taylor, Mike Boskin, and John Kogan, signing an open letter to Ben Bernanke, which read in part, quote, we believe the large-scale asset purchase plan should be discontinued. The planned asset purchases risk currency debasement and inflation, and we do not think they will achieve the Fed's objective of promoting employment, close quote. Whose side is Tom Sowell on?
Oh, I'm on the side of people say they shouldn't have done it.
Easy. Another easy one.
Oh, my gosh, yes. There used to be a phrase for this. It was called monetizing the debt. It means that the Treasury Department has deficit spending, so they put out all these bonds that they're selling, and if the public won't buy them, the Federal Reserve will buy them because the Federal Reserve can legally print its own money. So it's no problem for the Federal Reserve to buy them. It's just that's what that amounts to is, one, inflation, and two, it amounts to a hidden tax, which will not be confined to the rich, as they call it. I mean, in other words, if you've got X thousands of dollars in your bank account and the Federal Reserve starts printing more money, it is simply stealing the value of the money that you put aside. Mm-hmm. So that's the same thing as a tax, only it's an inflation tax.
But Tom, you're answering these questions with the greatest of ease, and you even find, I can tell from your face, you find some of the questions amusing. So a layman like me, like our viewers, says, well, now wait a minute. Dr. Sowell's an eminent figure, and I even had in these emails somebody commenting on your lovely baritone voice. You're a sterling figure in all kinds of ways. But Ben Bernanke is a Princeton.
Oh, yeah.
In other words, what is he thinking? What does Ben Bernanke think he's doing? It can't be that easy, can it? To say, oh no, that's a mistake.
Well, Ben Bernanke is chairman of the Federal Reserve System. He's no longer a professor at Princeton. Well, he's in absentia.
Emeritus. Or right. He's taking a leave of absence, right?
Yes. And so we have a whole different set of incentives and constraints on him. One of the most painful things for me was reading an article by Arthur F. Burns based on his experience when he was chairman of the Federal Reserve System.
In the 70s, this would be 60s
Yes.
and 70s,
Yes.
under Richard Nixon.
Yes.
Right.
And he spelled out that, you know, when you're in the Federal Reserve System, you're not a free agent. It's not like you're conducting a seminar at Columbia and can just simply say and do whatever you want to do. You're operating within very narrow limits. The Federal Reserve is, quote, independent, unquote, but Congress can change the amount of that independence anytime they take a notion. And so even if you're following policies that are good policies, you've got to watch your back, because Congress can step in at any time and stop you. And so it's a very tense kind of situation.
All right.
All right, Luke. Still all paper value, though, Professor. So you're saying the 2,400 now is paper gold? Yeah. Well, and that's where we're going to go to physical once BRICS comes out. They're buying all the gold and the dollar's going out. That's going to force the derivatives to go away because the dollars will be worthless. And then they're going to have a physical price. So when BRICS comes out, they're going to want, I don't know, my guess is like a 5,000 to 10,000 an ounce gold price, because there's so many people, they can't, you got to have as many dollars as you have gold. So if you have 10 billion in gold, you can only print $10 billion. You got all these people in China and India, there's billions of people. So they all got to be able to get the dollar, and then if they want, trade it in for the gold. So you're limited in how many dollars you have based on how much gold, and the price of the gold is the kicker. At 2,500 an ounce, I can't print as much. But if I just make it 5,000, I can print twice as much. So if I make it 10,000, I can print 4 times as much. So that's where we're headed. We're headed there in October. So, yeah, it's paper price, but it's still 2,400 paper price. So that's good. All right. So that's enough of Thomas Sowell. 3 hours. So I am exhausted. Time for dinner. But that's what economics is. It's not these graphs and charts that nobody knows what the fuck you're saying. And what was it? Elastic and inelastic. I have no idea what they mean. From a rubber band, it's elastic and it's inelastic. It breaks, I guess, but I can't tell you what means what, nor do I care what means what. I remember I walked into my bank, Fifth Third, and I said, no, I want to buy, and what are you going to do with the money? I'm going to buy gold. And this investment guy comes up to me, and I said, well, I'm an economist. I just want the gold. And he goes, okay, tell me about elastic and inelastic. I go, I don't talk Keynesian. I don't want to have a Keynesian conversation. And he kind of laughed at me. Oh, you don't know what you're talking about. And I'm going, I don't know Keynes, and nor do I want to learn it, because it's just a waste of time. But anyway, so hopefully they got better loans where people can afford them. The rates are much higher. So what you're going to see now is people can't afford to pay their loans back. This is where the banks are in trouble. They're relying on the mortgage. If I give you a mortgage at 7%, because I got to give the guy who brought the money in for the savings the 3%. So Bobby comes in with $1 million. I give him 3%. I take Bobby's money and I sell Luke a house at 7%. I give him $1 million, and now he's going to pay me back over 30 years, 7%. And I'm going to take the 7 and give 3 back to Bobby for his money market, and I'll keep the 4%. That's how a bank works. The problem we're running into now is that people are defaulting on their mortgages, houses and cars. They can't pay them back. This is the bank crisis we're running into. Banks what are they going to do? And so people won't be able to pay their houses and cars. And then their credit card debt, they're all swamped in that. So there's a big debt problem. And that's why you need gold, because it's not a debt instrument. It's an asset. It's the Mantle card. It's the Mahone. Like this is not debt. So the difference is this is debt. This is an IOU $1. This is not debt. I own it. So I can sell it and get the full money for it. This is backed by the Federal Reserve. So it's not, it's an IOU you really don't see the Fed backing it, but this is mine or the Rolex or the, anything like that. This is what it is. So that's what you have there is a bunch of debt out there, and then they won't be able to pay it back. As interest rates on credit cards go up, well, I got to pay interest on that. I can't afford the house or the car, or I can pay the house or the car. I can't pay the credit card. Either way, the banks get screwed because the banks are the one lending you the money, needing the interest rate to pay off the other things, because that's how they make it. I like this black guy. He's great. Thomas Sowell is a Austrian, and definitely I would read that book if I were you, or find it. Like here, he's talking about it, but if you get a chance to read it, yeah, you'll learn a lot. Thanks for this. Rolling the dice. Well, what you want to do, you always want to look at risk reward. What is my risk versus what is my reward? Bitcoin, you took a huge risk, but you got a huge reward. The gold stocks wasn't the best risk reward, because if you were in physical, you wouldn't have risk and you would have gotten a huge reward. So the stocks, you did well, but then you've got to understand the next part of the gambling is to take your profit. That's why I try to talk gambling in here, because you're gambling with the money in the bank. You're gambling, you can get it out. You're gambling on the stock market that you can get that out, that they're not going to stop trading on you. They stopped trading for 3 hours. So who's to say they turn it back on? Who's to say you're going to get your money from the bank? I show you the China, they can only get, $150 out. Well, let's say here, you got $1 million in the bank. You think you're set, but you can only get 5,000 out per week or whatever. So what are you going to, so do you really have $1 million in the bank? Well, you do theoretically, but you can't get it. So I'd say no. What I would do if that happened, I would run to the gold store and I would use my debit card. Well, I'd have to change it into my checking account. So it's on my debit card, $1 million, and I would pound all the gold he had. Give me 100 grand of gold, which would only be like 40 ounces now. My friend did it. He had 100 grand check. He got 55 ounces of gold. Now his 100 grand at 2,500 an ounce is only 20 ounces, right? It's 40 ounces. So you go from 55 ounces to 40 ounces. And when it hits 5 grand, you're going to, as it hits 10 grand, you're going to get 10 ounces. That's why I say buy it now while you can, while it's affordable and it's available. It's not going to be available soon. The only reason it's available, people are selling it. Well, people are going to either stop selling it or realize that it's going up or run out. I've sold it all. And I'm not going to be able to go to the guy's store because he won't have inventory. But he's got 3 stores, so I hope I find enough. But that's the thing. So it's finding the inventory and how much can you afford? And that's why I'm already all in. I've already taken my money out of the bank and I already bought the gold. So I'm in at 1,700, 1,800 and waiting and knowing it's not going to 0, knowing it's not going to 1,000. It's not going to 2,000. It's just we're on the elevator ride up. And I know that. So that's really all I'm looking at. So that's why I don't really care what comex, if it's 23.80 now or 24.80. It's getting it out of the paper into the physical is what we're waiting for. Waiting for comex in October. That's what we're waiting for. When we get to there and the dollar collapses, which it's collapsing, the sources that be the George Soros want the U.S. to collapse. So that means the dollar collapses, which means only thing is gold. Well, look at Venezuela. You can't afford anything in Venezuela dollars. However, if you have U.S. dollars there, you can afford everything. And if you have gold there, you can afford everything. So don't kid yourself into thinking that just because you have inflation in one currency, But if you have gold, it's never inflated. So you always have an out with the gold. You might have to go to Switzerland to cash it in versus here, but you get on a plane, you go. I mean, if that's what it takes, and you go see Egon. So that's the point of it. Anyway, so that's what's going on. And enjoy baseball one more time. And I know some of these games have left. The Yankees over 8.5, Arizona, San Diego, Washington over 7.5. Toronto over 9.5. Atlanta, the Yankees over 9. Tampa Bay under 7.5. Boston under 8.5. Colorado over 11. Detroit under 6. I don't like that one. Philly over 9. I don't like it, but with school ball and they can't hit and Seattle can't hit, I don't think I think it'll be 2-0. So that's today's baseball. I went through week 1 of college football again, week 1A, 1B. I just went through the lines and last year's defense, which I don't know how helpful it'll be, but we need something. Anyway, you have a nice night also. You're welcome for the insight. That's why I do the class. Here you are investing in gold and Bitcoin and stocks and ETFs, and you really don't understand it. But yet you did okay with the Bitcoin, and you're going to do great with the gold and silver, but you really don't understand yet. You're just kind of, you're kind of like your eyes are closed, the dark, and you're feeling around, but you don't really know what's really going on. And that's what I'm saying. Multiply that by a million, infinity, and that's what the people, they don't know what we know. And that's the problem. So they get scared and they go, well, I got oil stock, I got Amazon stock, I got a 401k or a pension. Well, you're about to lose it. So you either get into gold and you survive, or you keep your money in that and watch it go to zero. As you saw, how many people got nervous when it dropped 1,000 points on Monday? I bet a lot. Then it came back a little, so everybody kind of relaxed, and now it dropped again. And it's going to keep dropping. Let's see how nervous people get. You know how nervous we're going to get? We're not going to get nervous at all because I'm not playing that game. I'm in gold. And I don't get nervous in gold because there's no reason, because they can't inflate it. They can't print it. That's what you're looking. That's the bottom line right there. Anyway, so have a wonderful night. I'll try to get on a little earlier. Tomorrow's Thursday? Friday's Mark McGuire Day. And I'm waiting to hear on the job. I thought he said, we'll hear today. The recruiter didn't call me. Let me just check my email. Sometimes this guy emails me. No. I don't know what to do. These people keep Director of Finance, MBA in Accounting and Financial Management, Economics from Munich. Oh, she works for Tesla, so I guess she's in Munich. So you can see that she's a German girl, the blondest. So I don't know. He didn't email me. So maybe he was out of the office. Maybe they haven't made up the decision. But I did talk to people about, did I fuck up by thinking I had it? I misread it. I thought I had it, He talked the starting date. He talked the salary. I said, "Oh, I got the job. I'm just meeting the staff." But they were interviewing me, and so I talked to a couple of recruiters. And said, no, that should be okay. Even though you jumped the gun, it was just miscommunication. It was an accident. She had to like that you were interested, even though she didn't make you the offer yet. But she does like you. That's why you met the staff. So you should be okay. Don't worry about it. So we'll see. I should hear in the next day or two. It's working from home 4 days a week. I can't beat that for an electric company, utilities, which would be perfect because the utility is, they're not going to have a problem with the inflation. Car companies will have problems, and this is Detroit with a bunch of car companies, but that's it. Well, you're welcome, Luke. You've influenced my portfolio over the last 2 years. Well, but I tried to help you and protect you is what I'm doing, because I know what I did is what you should do what I did, because I wouldn't have done it if I didn't know what I was doing, right? So that's what I'm trying to tell you. Now I have physical little portfolio. Yeah, but that's now you're the real reason is this is inflated to zero. Going to be like the Roman Empire and the British and the French. They all inflated their money and went out. And that's what this is what it's worth. And I show you the Egon. It's lost 98.5% of its value. Why do you want to keep holding it? And so your only alternative is the gold lifeboat, because gold can't be inflated. So as the dollar goes out, the gold doesn't go out because you can't print it. So gold holds its value. And that's what you want. That's why everybody hoards gold, because they know it can't lose its value. And so you end up maybe selling a little of it, because you don't have to sell most of it, you keep. And then you give it to your kids or your wife and, whatever. And they pass it down, and you're millionaires the rest of your life, or your kids and everybody. That's how you protect your family, is with the gold. So anyway, that's really the bottom line with it is you need to understand what inflation is. Oh, it's printing the money makes it worthless. That's what the key is. But what do they say? For some reason, they say it's prices. Oh, the prices are going up. That's inflation. No, it's not. It's the printing of the dollar. You're inflating the supply of dollars, making the value drop, and they lose value. And then it just takes more dollars to buy the same thing. That's the prices going up, but really it's the printing of it. So you get that, and then you go, well, what do I put it? And I give you the lifeboat is gold, because they can't print gold. They can't counterfeit it. They can't inflate it. Gold's gold. You go into my coin store, my jewelry store, and there's a little scale and a little detector. Yes, these are legit. And that's all you do, especially gold. You buy a maple leaf, you buy a Cougaran, you buy an eagle. Well, you're probably going to be okay there. And the only time you won't is if it just doesn't look right. I've had a few Cougarans that were older that they piled a lot of shit into their gold, but it's still an ounce of gold. There's just other elements included. But you're pretty safe. And again, so I'll go to the jeweler and sell when I need to, if I need to. Or I'll be in Switzerland. There'll be a trigger of selling it. People will probably want to tax you or take some, but if I bought it for $1,700 and I sell it for $17,000 and I lose $100, fine. If that's what it takes to cash it in, and that's all you do. But that's what you're realizing is you want limited things. That's really the key. But Picasso's, you want Rembrandts and Van Goghs, you want the Rolex. They're very limited, and so it's very limited with high demand. That's the problem with Barry. Barry there's only 100 of them, but the steroids have ruined his demand. I think I have Clemens in this too, but there's no demand because he did steroids. That's the other part of the equation. Gold, there's huge demand for. Right, so you don't have to worry about demand for gold or Rolex. but you could get hurt. And, if Mahomes all of a sudden does steroids or gets into some certain things, then maybe nobody wants him. So it's got to have the demand. But that's why Mantle is perfect, because he's dead. He can't do anything. So his demand's huge. He's Mickey Mantle. He's a god. So anything you got of his. I mean, a PSA 9 Mantle is 75,000 and 65 tops. And if you look at a PSA 9 Maze, it's probably 10 grand. So it's only Mantle that gets that kind of attention. So you can't lose with Mantle either, basically. That's why I bring it up. He's a real asset. There's huge demand, and especially an older card as a PSA 9 or PSA 10, it's a very limited supply with huge demand. That's why he gets the price. Those are the keys to really being sound economically and investing, and that's how you survive is to have that kind of stuff. So you don't want to be in Bitcoin because you want to have a reason, but 21 million ounces is not limited, right? You're much better off in the Mantle card or the Montana rookie. It's much more limited than 21 million. And there's no way Bitcoin will be money. It's not accepted. It's not money. So never think about it. You think I'm right. I don't know what I'm right about, but I agree with you. That's what most people don't. They don't know what they're like. I'm watching Madoff again, taking notes, and it's the same thing. My dad was in Madoff. My aunt was in Madoff, so I trusted them. Saul was in Madoff because he was a Wall Street guy, and he's still in Madoff, and it's still a Ponzi scheme. This is a Wall Street trader, and he got fucked. If it smells funny, it is. Oh, I'm going to make 15% on Madoff. Okay, what does he do? I don't know. I was told that, right? When I was still married in the early 2000s, my brother-in-law was in a Madoff thing. Says I get 10, 15%. I go, how can you do that? Well, I think it's in strip malls. No, that doesn't make. So I knew I had my master's. I go, no, nothing makes sense. And I just laughed, like, well, you're gonna get burnt, and I'm not gonna be a part of it. And I just said to my ex at the time, you can't make if the banks are giving you 3-4%, and the stocks are giving you 5-6%. How do you get 12-13%? As something doesn't smell right. So I didn't get into it, knowing that there's no way it's real. But I know this shit, so I don't get burned. That's the whole key to it. If you understand it, you won't get burned. That's why baseball is very difficult. I agree. Football, I know inside and out. That's why we win every year with football, because I know what to look for and the variables and how to pick it. So that's the key is understanding it. In the interview yesterday, they asked me stuff, and I said, have you ever worked on, what is this thing called? I keep wanting to say QAD, but I know that's not right. Anyway, it's a SQL. That's what it is, SQL. Have you ever worked on SQL? I said, no, but I've done a lot of relationship database, and I've done a lot of looking at data in Excel and in Hyperion Essbase, and I think I ran queries in PeopleSoft way back when I was in Ford. I thought I did, but it was one time. I suppose it's easy. You're taking a bunch of data, and you're taking NFL data, and you're going, give me the quarterbacks. What's the starting? Give me all the quarterbacks. So you go into the big data and you filter on quarterbacks. Or if you did colors, there's green, yellow, and red in this data, and you say, give me all the green. And that's what a relationship database is. How hard is that, right? And I probably could do it 10 times quicker in Excel running a pivot table than I can in SQL. But that's more if you're an IT guy, you use SQL. If you're a finance guy, you use Excel or Hyperion Essbase. Anyway, that's about it. Have a nice night. Time for dinner. It's 7:15. I hate eating too late. So I was a little busy this morning, and I went out for lunch. I got a burger and chili, and it was so fucking hot. Not, it was temperature. It was very hot. So I ate that after swimming. I'm nervous about the job, but I'm not getting any contact. So they're probably thinking about it. Do I want Howard or not? I thought after Friday I had it, so we'll see. Anyway, have a nice night, and I will see you tomorrow. I'll probably get on hopefully about 2:30, 3 o'clock, because I go to the pool, and then maybe I run to the market, and then I come in and I'm in. All right. I will talk to you soon then. Have a nice night. Good luck. www.teaserking.com. You'll need that to sign up for the football class and NFL and college. There'll be 2 classes, or just go there to buy the picks. Anyway, so have a good night. Luke, you take care. Are we traveling somewhere? You coming here or Pittsburgh or something? Let me know. You can get my email on the Teaserking.com homepage. You'll see my email there, and you can email me. You should interview with Barstool. What's Barstool? Or are you saying a Barstool? Is that a bear, or is that a bar, or what is it? Or are you just saying go to a bar and interview? All right, I'll talk to you later. All right, soon we'll go to Capitol Grill. All right, take care, Luke.